gracious. Good morning, everybody. Excuse me. Good morning. Welcome to the room. Hey, what's up, Jay? Good morning, Cav. Good to see you guys. Sorry, I'm doing a little annotation, going through, doing my thing, having some fun. Hope everybody's doing well this morning. First day of November. Can you believe it? Holy moly. Great to have you guys in here today. We'll let everyone file in. Crappy mic connection. Can you guys hear me okay? Maybe it's crappy speaker connections. Guys, give me a Y if I'm coming through loud and clear, or am I crappy, choppy, dicey? I can reload. I can always reload, make sure that we're good. I did walk away from the microphone for a second to close the door, so that may have been it. Nice to have everybody here today. Hope you're all doing well. Hope you are full of chocolate and sugar from Halloween. No sound at all? All right. Guys, will you give me a Y if you can hear me? Nope. Okay. Then I'm going to reload. So you will get bumped. Please come back. There we go. Sorry, YouTubers. Sometimes it happens. Excuse me, goodness gracious. Allergies are real. All right, let's bring them back and see if they can hear us. Thank you for your patience, all of you guys in YouTube land. Gonna see if we can get going. All right, guys. Do we get some sound out of this one? All good. I always talk to the YouTube people when I have to do this. I'm like, sorry, YouTube people. Certainly didn't mean to do that, but that happens. All right. Good morning, everybody. Let's try this again. Let's try it again. All right. Trading is about patterns. Trading is about routines. Trading is about having advantages, guys. So every morning after I study my charts to get into the day, one of the first things I do is I go to forexfactory.com because one of the things that can happen when there's news releases is that the market can go kind of crazy. If you're a NASDAQ trader, it went nuts right at 8:30. I don't know what the S&P did. But all of those red impact news, high impact news, guys, they've got the potential to make things go a little crazy. So I check this every morning and I don't worry about it. Like, there's no part of my brain that says, wow, I have to wait for the release of the average hourly earnings so that I know which direction to go. Guys, I'm trading patterns. I teach patterns. I don't teach how to use news releases. But what I do know is that these high impact, these medium impact news releases may affect your patterns. I make the choice not to trade. I won't trade a few minutes before news. And I won't try to take a trade again until things have calmed down and my charts are readable. So we made it through the 8:30, and now the next one's going to be 10 a.m., guys. The ISM Manufacturing PMI. Have no idea what that means, but what I do know is that it's high impact, and I'm going to make the choice not to trade into it. When we discuss what we discuss, guys, it all comes from the Nexgen page, specifically the trading guide. There's really not any secrets with Nexgen. There's no let's get you in the door and then charge you for the next level or anything like that. There's this awesomeness that I'm going to give you everything that you need. I'm going to give you everything that you need to be successful with the software. I'm going to give you rules. I'm going to hand you a plan. I'm going to teach you how to study it. I'm going to give you everything that you need. And I'm going to keep it really simple, guys. And everything that you need begins with a high probability trend trade. You're welcome. A high probability trend trade, guys. Why? Just listen to the words. High probability. That feels good. High probability is defined when each indicator on every chart agrees for the rules for the trade, and there's strong triggers and no terminations. Nothing between you and your trouble spots, guys. This is the best of the best. This is the easiest of the easy, and this is a trade that typically wins 70 to 80% of the time if you can just follow the rules. All of that success through the winnings, it creates confidence, guys. You're developing trust in a methodology that is testable, that is repeatable, that has been proven to win more than it loses, and that's a statistical advantage, and that's a reason to get into a trade. But we talk about this high probability trend trade more importantly than anything because it teaches you to read your indicators. And it's funny because when you think about becoming a day trader, you don't think, oh wow, I'm gonna read stuff, I'm gonna do this. You're thinking, I'm gonna make money, and that's normal, guys. That's the human thought process anytime you have a job, is I've got to get paid. But I'm going to tell you that this is one of the laziest jobs that you'll ever have. This is the job that requires the most patience because 90% of your day will be spent doing nothing. 90% of your day will be spent sitting on your hands. 10% of your day will be taking those advantages that you're able to identify through your chart reading and turning them into trades, guys. And once you start to get good at this indicator reading, this chart reading, guys, you're going to understand a couple key concepts. You're going to know where the market is most likely to continue. Notice that the words likely are in these phrases, not where the market will definitely continue, not where the market will definitely reverse or terminate, but rather the pattern suggests that this is an area that the market is most likely to continue, and you'll be able to identify those areas where the market is most likely to go, and you will have a very clear understanding of where the market is most likely to stop, guys. And you're going to take these ideas, this chart reading, and it's going to let you know that your rules are met. And the rules for the high probability trend trade, there's only 3. Each rule creates an advantage. It's the accumulation of advantages that creates a trade, guys. It's not your desire to be long or to be short or to pay for a new house or a new boat. But it's 3 rules, 3 advantages, and when the advantages are true, it's time to take a trade. And one of the best things you can do for yourself, new users, is learn to talk out loud every time you look at your charts. Rule number 1 says that you must have strong triggers. That creates the advantage of momentum. So when you're thinking about taking a trade, you should say out loud, I mean literally, scare your pets, I have momentum, I do not have momentum, guys. Because one of the cool things about the human brain is it listens to you. Whether your speak is positive or negative, whether it's truthful or whether you're lying to it, it believes you. So if you commit to the idea that you're going to say out loud, I have momentum when momentum is present, guys, your brain's going to click and say, hey, things are looking good. And then you've got to speak out loud whether or not you have that clear path, whether those likely to stop areas are in your way. And then finally, you'll use the language for entry, guys. Am I looking for an area inside of favorable large triggers? Do I have it? And what you're going to do is we're going to learn to recognize these 3 rules. We're going to break them down individually, how to study them, what they mean to you. And these are the words that you're going to start saying every time you look at your charts before you get into a trade. Because what it's going to do is it's going to set you up to enter the market with a statistical advantage, taking a pattern that has been proven to win more than it loses. These 3 advantages, these 3 rules happen on only 2 charts. More specifically, your first 2 rules will be identified on the first bar of a large chart. And this large chart's a very slow-moving chart. It kind of rambles on. It's hard to see change on it, and it really gives the overall opinion of the market, guys. This most current bar will allow you to find direction, momentum, and areas. Your first 2 rules happen on the large chart, guys. And what you're going to find is that once you understand the first 2 rules on the large chart, your entry rules are going to change all over the place. You're going to see so many opportunities. But initially, rule number 3, finding your entry for the highest probability trend trade, it's going to come to be on a refinement chart. And when the rules are met on the large chart, the small chart is going to take that 1 bar's worth of information and break it down into about 20 to 30 bars. You're going to see a retracement, you're going to see a bounce, you're going to see continuation all inside of this one bar. By refining it on a small chart using rule number 3, you're going to be able to reduce your risk and increase your profit potential, guys. So it's only 3 rules, it's only 2 charts, and we use these 2 charts, and I want you to really think about this. Ask yourself, who am I trading with? Who am I trading against? Your big charts, your large charts, guys, this is a large crowd. These are the men and women that can move the markets, that can create trends, that can establish momentum. These are the people that react at those key areas, and these are the movers and the shakers. The easiest, the path of least resistance, is just go with them. If they say up, go up with them, and if they say down, let's go down with them. And the large crowd typically wins. Your small chart is the small crowd. The fighters, the rebels, the ne'er-do-wellers. And these guys, they push against the large crowd, and they have enough money to make these little ripples, these tiny little retracements, guys. But your small crowd is going to fail 70 to 80% of the time, whether it's intentional or whether it's accidental. When the large chart gives you momentum and a clear path, the small crowd is likely to fail 70 to 80% of the time. We're going to use rule number 3 on that refinement chart to allow them to create a retracement, and then we're going to pinpoint exactly where they're most likely to fail. And that failure point becomes the entry for the highest probability trend trade. So there's a path to get to where you want to be. Posting your trades in class, guys, this is the beginning of it. And if you're interested, you don't have to. Scroll up to the beginning of the day. I gave you guys a little insight on how I learned something new. I have a very artsy-fartsy brain. I'm very visual. Not everybody's like that, and my way may not work for you, but it worked great for me, which is why I shared it. You've got to post in the room, and you've got to get feedback, guys. You've got to look at charts and talk about what you see on these charts, and post them in the room, and let somebody that understands this better than you make sure that your chart reads are accurate. Make sure that your understanding is where it needs to be. And you do that by having a conversation with me via pictures, guys. We're going to learn those trigger line and Fibonacci rules for when it's okay to trade. You're going to simulate, and you're going to practice, and you're going to do all these great things. And some of them are going to win, and some of them are going to lose, and some of them are going to fit rules, and some of them are going to break rules. And I want you to be okay with each and every part of that. Because one of the great things about what we do is we have simulator. We have a simulator that there's no risk of loss of capital, and all you're doing is practicing, and you're making mistakes. And guys, I'm going to tell you right now, I have made 1,000 mistakes in the last 3 weeks learning this new process, and every one of them has been documented and typed out and learned from, and that's kind of what I'm hoping you'll do too. So you're going to post your trades in the room, but you're also going to post them into a spreadsheet. Nexgen gives you the spreadsheet when you download software. I give you my spreadsheet every day because I like to update it with y'all's great trades a lot. The first tab on this spreadsheet is your trade journal. Every time you take a trade, and I'm going to tell you, I'm going to share, I'm going to air all my dirty laundry today. I never took pictures of losers because it hurt my feelings, guys. I didn't take pictures when I broke the rules because I knew I broke my rules and I felt bad about it. There's this little element of shame that came with it. Take pictures of not only the winners, the great ones, the ones that are perfect, because you're going to use those for your trading plan, but take pictures of your mistakes, guys, because you're going to notice that if you take enough pictures of a mistake, you don't want to make that mistake anymore. So everything you do, take a picture, and then even more importantly than the picture, I think, is talk about what you see. And guys, this is my request and borderline requirement for sharing your trades in this room. Tell me what you see. Tell me what your chart read was. Go back to those 3 simple advantages: momentum, clear path, and entry. Talk about them. Show me where you get in. Show me where you get out. Because every time you give me this, we're going to make sure you're doing things right. Every time you give me this, we're going to make sure that you have the correct rules. We're going to make sure that you understand the look. And if there's a challenge, we're going to work together to correct that challenge, guys. So post in the room. Use the spreadsheet, track it, and any feedback you get from class, drop it in the notes section. Hey, Mark said XYZ. Mark said that I traded into a termination. Mark said this is the one that I should never miss, right? Your spouse should get tired of hearing Mark said, and then you have to come back and study it. And this is where the spreadsheet really pays off, guys. Taking pictures is good. I'm going to tell you that right now. Taking pictures is good. Writing on those pictures is amazing because it creates this correlation between the brain and what it sees and what it thinks about that vision. And then coming back and studying what you did yesterday, guys, this is where you will move forward the fastest. Because if you come back every morning and look at what you did yesterday and you say, hey, what worked and what didn't work, well, then you start to focus on these advantages. You start to recognize these patterns that are bringing you success, and you begin to recognize the patterns that are taking that success away from you. And that's one of the things that I tend to be pretty good at, is if you give me 5, 7 charts in this room and you tell me what you see, guys, everybody has a thing. Everybody has a rule that they break or a nervous tick that shows up. And if you give me a few charts, guys, I'm going to recognize that in you, and I'm going to help you and develop a plan for you to beat that, for you to get over that, for you to clear that hurdle so that you can move forward towards being profitable. Over here on the side, there's how to paste those links in there so that you can do the hyperlinks. And then the annotation again, guys, how to get good fast. I can't stress this enough. Every time you take a trade, no matter what kind of trade it is, talk about where that's coming from. Talk about the advantage of momentum. Talk about whether or not the path was clear, and show your entries and your exits, guys. Don't just show entries. Show entries and exits. And I'll tell you, I even come back and take pictures after the trade to see what the market did after I exited, because there's a lot of management opportunities in there. We're going to simplify. I feel like I'm talking without breathing. We're going to simplify. We're going to focus on this highest probability trend trade. I do this every day, guys. I've done this every day for 5 years. High probability trend trade is your foundation trade. This is your first trade. This is not your only trade. But once you understand this trade, it's going to open doors for you to find more opportunities. It's going to open doors for different management plans. You're going to begin to recognize patterns in the market that you've never seen before. But you've got to learn the looks so that they become easy. You've got to understand the rules and how to identify them. And you got to know how to piece them together to make it look like a trade. The third tab, the 101 tab, this is how you're going to get good. This is how you're going to be able to read your indicators in a fraction of a second to know whether or not you have those advantages. And this is each rule. Hey, happy Friday, Paul. This is each rule broken down individually in the green section, guys. Strong triggers, clear path, entry area. You should be able to identify each of these individually. You should understand what that advantage means to you. And eventually you're going to learn how to piece them together to enter the market for the highest probability trend trade. I think it is just as important to understand weak triggers and termination conditions when the rules aren't met, because you are going to have to look at your chart and make a decision about whether or not you have those advantages. And if you fill out every section of this, and I'm going to give you a sheet to make it easier to give you a path, it's difficult. It's difficult to break your rules on accident. You may do it intentionally, but it's hard to do it on accident. And then there's the client trade section. And Mike, I'll get you in 1 second on that. And this is where you guys are brilliant. This is where you guys are showing me trades with momentum and that clear path and those beautiful entries. And you're showing me trades with great management. And you're showing me trades with management opportunities. And what this is a place for you guys to study, to come back to see these looks so that they become easy. There's the high probability trend trade entries for long and short. There's a very mechanical way to manage it for the beginner. There's a lot of ideas on management once you progress a little bit, patterns that repeat themselves, guys. And your job is to make the favorite look section look just like the one that I put together for you there. So use that spreadsheet. It's a time-tested, proven path to get to where you want to be. Learn the rules, practice them until you follow them. Get feedback in the room to make sure that you're not doing anything wrong, or if you are doing something wrong, you get a plan to fix it. And guys, commit those looks to memory through repetition. Repetition creates recognition. And Mike asked, Mark, do you annotate your charts as you take pictures during the day, or wait till you're finished to not take time in the heat of trading? Mike, if I can be 100% honest, I don't believe in the heat of trading. I am so comfortable with everything that I'm looking for that I'll take pictures in the middle of trades. I'll take pictures before trades. I'll take pictures after trades. I'll take pictures during trades. I'll take pictures when the trade is over to see what it did afterwards. I'll talk about whether or not I could have managed it better. And I do all of this, Mike, as I'm taking my trades, because one of the things that I'm very, very certain about is what it takes to get me into the market. And I have time to take a picture. I know exactly where my orders go. And for me, I have time. There will be times where I might have to take a picture and come back and annotate it. I don't always annotate in the moment. But I will snap 10 to 15 pictures per trade. And that's what I put in the room earlier. If you scroll up and look at it, you'll see it. But let me find that picture and I'll just share it with you guys. Oh my gosh, I take a lot of pictures. And you know what? It's not in my Snagit because I had to take it with capture. So this is what it looks like, Mike, throughout the course of a trade. Here we go. That's the one that I wanted. It'll be a little more clear. I take my trade. It goes to completion. And there were 10 pictures taken for one trade here. There were pictures from my entry. There was actually a picture that said, hey, this isn't my entry yet. You have to wait for the right entry. I took a picture right here and said, that's not it. Wait for the right one. And then I take the right picture. And then I start talking about everything that I see. I start talking about where my targets are and why. And guys, it takes time to do this. This isn't the easiest thing in the world to do because that's a lot of information, right? Especially if you're brand new, you're focused on things. Sometimes I'll take 4 or 5 pictures and piece them together because I've got the greatest lesson ever here. The greatest lesson ever here. So I want to make sure that I'm committing that lesson to memory, that I'm understanding that lesson, that I know exactly why it is that I'm doing what I'm doing. And there's a good picture, and this is one that I came back and annotated, Mike. This is a picture that I took 4 or 5 pictures worth of information, and I talked about my entry not being correct, and then I talked about why this was the correct entry. And then I talked about where my first target is and why, and I talked about where my second target was and why. And I can come back and look at this, and there is absolutely no question about why I did what I did and why I looked where I looked. And guys, this is why I encourage you guys to take pictures. I've already taken 40 or 50 pictures this morning. My poor brother, John Novak, before he ever woke up, he got all of these pictures from me. He got all of this from me this morning before he ever even opened Skype. That poor bastard. If you think you're taking enough pictures, take more. Trust me, it works. But you got to break these down individually. Whoops. And you got to understand what it is you're looking for, guys. Man, Paul, I'm telling you, John Novak is my sounding board. And I'm taking Safia and Janesh's ale class. So this morning when I had management questions, poor Safia got 6 pictures from me. Hey, this is what I did. This is where I did it. This is why I did it. Is my thinking right? And I got amazing coaching. I got amazing coaching from her this morning. And guys, you have the opportunity. You have the opportunity to get that coaching each and every day, live in the morning. You had the opportunity every time you take a trade to drop it in here. You have too many kids. That's your fault, Paul. They're too much fun to make. It's all right. They grow up one day, and then you miss them. So guys, take advantage of this classroom, and that's one of the reasons that I posted that this morning. Take advantage of this classroom. Take advantage of being able to get feedback on everything that you present. Take advantage of this path because this path has been proven to work. So we're going to start working the path, guys. We're going to take these 3 rules and break them down individually. Everything starts with strong triggers, guys. Strong triggers create the advantage of momentum. Strong triggers come to you on the large chart. So it's important to understand trend first, guys. When the background on the large chart is green, the market's going up. And if the market's going up, the easiest thing to do is go up with that large crowd. Look for your rules to be met for high probability trend trades long. If the background is red, it's going down. Look for your rules to be met for high probability trend trade short, guys. This is the path of least resistance. To have strong triggers in an uptrend, your small triggers are going to be green. They have to. It's the only way it works. Your large triggers are going to be green. They have to. It's the only way strong triggers can happen. When my small triggers break up and above the large triggers, my large triggers are widening the space between small and large. This is what lets me know that I have strong triggers. This is the strong trigger look. This is the best of the best. One of the things that I like to tell you guys, because again, I'm visual, you may not be. Some of you just like to latch onto the words. But when I have strong triggers, it looks like scissors that have been opened and are ready to cut, guys. And that space is the dotted line that I'm about to cut on. Open scissors is strength, and the same is true here in a downtrend. When the smalls are below the large, when the large are wide, angled in the direction of the trend, guys, these open scissors, that separation between the two, I forgot the other handle, lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is what you're going to hear in this classroom all day long, guys. OFM. You're going to see it on charts. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum has the potential to break those key areas that you're going to see on your charts. And guys, odds favorable momentum will cover a lot of the mistakes that we make as new users. And odds favorable momentum for the experienced user will tell you, hey, this advantage is so strong, maybe I can take a chance and manage aggressively, even though this other rule isn't met, guys. And strength happens all day, but it doesn't happen consistently all day. It's cyclical. I'm going to pull out an old picture that I like, and we'll talk about this in 1 second. But I want you to see this. When the scissors close, when the small triggers return to the large triggers, when the space is no longer there, guys, this is weakness. And when I have weakness, anything can happen up or down. And you're going to see this on charts from some people. ACH. What was my momentum like? Well, my momentum told me that anything can happen up or down. Guys, these weak triggers are where you're going to see big retracements, like from the middle of nowhere. These weak triggers are where you're going to see areas hold, those key Fibonacci areas. And what you'll find, and this, I took this picture, and this was over the course of about 4 hours. And if we just start from the left, strong triggers push the market down. And I took all of the areas off of this chart. Weak triggers, anything can happen triggers, is exactly where that market reversed. It created strength and the market pushed up. When they went weak again, sure enough, a reversal creates strength and the market pushes down. And guys, this is it. This is how it works almost every day. And I talk about the colors because you're going to be able to use those colors a little bit to recognize transition areas. You're going to be able to use that color agreement to know when the buyers and sellers are fighting, guys. And sometimes the large triggers will be down and the smalls will be up, or both triggers will be red, but the background is green. And guys, anytime you have that disagreement, you don't have strong triggers. And the market doesn't know what the heck it's going to do. Buyers and sellers are fighting right now, guys, and this is kind of a transition phase. And this is where a lot of folks are going to try to predict which way the market's going to go and what the market's going to do. And guys, one of the easiest things you can do when that rule isn't met is to do absolutely nothing, because they will settle their grudge, and one of them eventually is going to win and give you what you need to have an advantage, guys. So rule number 1. Strong triggers. What's it look like in an actual market and not these hand-picked, cherry-picked pictures, right? Rule number 1, strength. Separation between the small and large, guys, has the potential to break areas. And I want you to see what happens when it weakens. Look at that giant retracement from weak triggers. Guys, this is beautiful. This is strength. This is weakness. And if you go back and you start taking pictures of strength, what happens is you begin to develop some trust in the idea that when there's separation, it's time to look for a trade. And if you go back and take pictures of weakness, it won't be long before you no longer try to take trades with weak triggers. It won't be long before you try to trade into areas with weak triggers, because that area is more likely to hold. So I'm going to ask the room, guys. I love it when you participate. It gives me all these warm, fuzzy feelings. Is everybody cool with momentum? Separation between the small and large. Rule number one leads the way, guys. Momentum pushes the market, can break key areas. Momentum even covers mistakes. This is the one that you need to be good at, and this is the easiest lesson that you're ever going to get. Once you have it, we have to make sure that we're not trading into one of those likely to stop areas. It's important that we have room to our targets, and when we do, we're going to call it a clear path, guys. And these termination conditions, they're Fibonacci-based indicators that have the potential to stop the market. That's all they are. They're horizontal lines on a large chart. Each line has a name. There's going to be divergence highs, and these are magenta lines that print from a pivot if there's a loss of momentum at the pivot, guys. Divergence simply means loss of momentum. You're going to see it the same look at the low, but it's cyan because we want to differentiate because colors are pretty. Guys, there's Fibonacci resistance, these red fibs. And on your large chart, they come from 3 different time frames. You're going to see thin ones, you're going to see thick ones, and you're going to see ones that extend all the way over, guys. Each line is equally as important. Resistance may create a bounce. It may stop the market. There may be a fight there, guys. These lines on the large chart are where the large crowd are making decisions. We're also going to use Fibonacci support. Those blue lines. These blue lines, if the market is trending down, may be a place where a reversal might happen. There may be a fight, guys. You just don't know. You'll never know. You'll never know what the market's going to do. You'll never know if it's going to go up, down. You never know if it's going to go left, right. The only thing you will ever be good at understanding is the potential. We're also going to use these yellow 1-to-1s, guys. And when the market's trending down, they act as support. When the market's trending up, they act as resistance. And I'm going to say it again. These areas are where decisions are made by the people that move the market. These areas are right where buyers buy and sellers sell, where those two forces fight. So to determine if they're behaving as a termination condition, guys, the first thing you're going to do is you're going to let price reach it. You're going to let those dynamic Renko bars get to the area. And if they get to the area, you're going to ask yourself, where are my triggers? If the trigger lines remain below an area of resistance, if you reach support and the trigger lines remain above an area of support, guys, these areas are behaving as termination condition. These areas may stop the market. These areas might produce a fight. They may reverse it completely. And if they reverse it completely from a high, that's a strong top. And if they reverse it completely from a low, that's a strong bottom. And while a strong top and a strong bottom aren't mandatory to take the highest probability trend trade, typically the trades that set up after a strong top or bottom provide the highest chance of success, guys. And you will become comfortable and learn to trust termination conditions if you go back to your large chart. Let's take a picture so I don't vandalize my chart so much. I just want you to see this. This is this morning in the S&P. Resistance stops the market. Momentum breaks it. Support stops the market. Resistance with weak triggers, back to support, back to a divergence high, and it's working its way right back to support. Did it stop it every time? Absolutely not. Did it stop it more often than it didn't? You better believe it did. That's why rule number 2 creates a statistical advantage. Because more often than not, when price reaches an area and the triggers remain below resistance or above support, that area is likely to stop the market. You don't want to trade into it. Does that make sense? I hope so. Guys, this is important. This is the most broken rule among new users. But areas break. Momentum tends to break areas if it's going to break. So when is the path clear? If I reach an area and I can't do anything. Guys, I have 2 choices. The area is either going to reverse and I'll look for trades the other direction, or it's going to break. And an area is considered broken when the small triggers and the large triggers, both lines of each, make it below support or above resistance, guys. This is it. It's the only recipe. Small and large triggers get below support. Support is now broken. It behaves as resistance. My path is clear. And my path is clear until I reach the next area. Price reaches resistance right here. Look at where those triggers are. They're nowhere near. I'm not taking this trade, even though it's going up. But once the small and the large clear, guys, resistance begins to behave as support. The path is clear until I reach the next area. This is what it looks like to have a clear path, guys. One of the best things that you can do is trade from areas that have been broken, or simply trade to areas once an area is broken, guys. And this is the very, very basic for the brand new user. And you're going to know whether or not you have momentum, and you're going to understand whether or not you have a termination condition on the most current bar. And guys, I have momentum for days right now. And let's see if it does it. Price just reached resistance. And I pause. And this is the second look, guys. Once you understand terminations, once you understand a clear path, you're going to start to recognize when areas have the potential to break. This is going to be your second trade. This is the most lost trade ever, guys. This is when momentum can break areas, and you're going to allow your trigger lines to show you that potential, guys. And when your small triggers smash through an area, but your large triggers lag behind, this is what we call the 50-50 look. 50% are through and 50% are not. And guys, this is the potential to break with all that momentum. And taking an entry based on the potential for an area to break is a medium probability scenario. You're no longer a high probability scenario because the path isn't clear. And if the path isn't clear, then all three of those high probability rules aren't met, guys. This is going to be the majority of your trade, and I'm going to give you a plan to take that one with the highest level of potential. And right now, look at this. The smalls have smashed through and the large have not. And guys, if you look at this one bar, you can see the dance happening right at these key areas. You know exactly where they are, and you can gauge the reaction. And it's pretty cool because you know precisely where the market may stop, guys. And there's going to be times when your areas are stacked, whether it's support or resistance, and you can't seem to find that clear path. And this is 90% of your day. And it's okay to do nothing, guys. The futures markets trade trillions every day, not billions. I need to correct this slide. The futures markets trade on average $220 billion an hour. You need to catch $400 to $500 a day, guys. Put yourself in that six-figure income. You don't have to be in every move. You don't have to be in every swing. You don't have to be the first person in or the last person out, guys. What you need to do is give yourself the highest chance of success. Iron Mike, I think the way you guys take it, it is. I think the way most of the people in this classroom take it, it is about a 20%. But the deal is I'm going to hand you a plan, Iron Mike, that's going to optimize your chances of success, that takes things into consideration that the average user doesn't take. I'm going to give you a rock solid plan to have the best of the best chance to win these trades. And more importantly, it's going to give you reasons to avoid taking it. Guys, rule number 2 gives you the ability to see where the driving forces are likely to make decisions. Rule number 2 is going to keep you out of consolidation, guys. Rule number 2 is going to just, you're going to identify consolidation, chop. You're going to be able to stay out of it. You're going to have to convince yourself that it's important that they get out of these areas to have that clear path to go. And Mike, I think 50-50s are amazing freaking trades. And I think most of the trades most traders take that are trend traders are 50-50 trades. And there's a way to do it. So we'll go through some ideas today. When we go through the KISS plan, I'll spend a little extra time on the 50-50 and give you some things to think about. But I just want to ask the whole class, guys, you know I love my whys. If price reaches resistance and the triggers remain below, there's no reason to take that long trade. If price reaches support and the triggers remain above, there's no reason to take that short trade, guys. We're better than that. And when you start to learn and see and study, you're going to realize that there's always another trade coming. There's almost always another trade coming. A termination condition. Gary, 50-50 means that you have identified a termination condition. In this case, Fibonacci support. And when you take that moment of pause, that, hey, my triggers haven't broken through, I shouldn't trade into this area, it might reverse the market, it might create a bounce, there's this progression as the market moves through it. First, it's a termination condition. Guys, every line's a termination condition for at least a second. And then when the small triggers break through, and Gary, it could be a fib, it could be a divergence high or low, it could be one-to-ones. Typically not a mid-band, because the only time a mid-band is a termination condition is if the large triggers are a full bar away. So that's how we gauge our mid-bands. This is the look. This is the look as it's breaking. And it may or may not. It is not a prediction of success. It is not an odds of winning. It is nothing more than saying 50% of my triggers are through and 50% are not. And watch this. What if we called this? What if we called this an above below trade? Because 50% are below and 50% are above. And thank you for putting that. But guys, this is it right here. It's not 50-50 chances. It's nothing more than a reference to the trigger lines. And the reason that you say that, the reason that you say, hey, these are through and these are not, because the only way an area is ever broken is if they both go through. So you know what you're up against. And I think that's one of the most important things, guys. When you understand what you're up against, you know how to manage that trade. You know if it needs to be managed aggressively. You know if you need to take quick profits and get to a zero loss level, because you're literally saying to yourself, holy smokes, out loud, my path isn't clear. No, Pete, no, respectfully, no. When the triggers are wide, it has the potential to break. They were wide there, and it didn't. They were wide there, and it didn't. They were wide here, and it didn't. They were wide here, and it created a big old bounce. Maybe it's an entry. They were screaming here, and it didn't. They were wide. It did not. And guys, I'm going to do this all day long to you. Strong as hell. Didn't break. Don't ever say more likely to break. They have the potential to break. But it's just potential, guys. That's all it is. And as soon as you convince yourself that this blue line is more likely to break, you're more likely to trade into that blue line. You're better than that. You will be. Sorry, Pete. I hate the word likely. I hate the word should. I hate the word will. It may. It has the potential. I don't ever want to put my brain in this idea that I know what's going to happen. So that's just me. Is everybody cool? Momentum leads the way. Large chart. Love it. Here we go. Things are good. Clear path is important because those lines can create bounces, guys. Once I have them, I'm going to look for an entry. I'm going to refine it. I'm going to say, wow, let's take that broad stroke of a brush. Let's break it down. Break it down into 20 to 30 bars. Let's pinpoint exactly where the market is most likely to continue. Let's pinpoint where that small crowd is most likely to fail. And guys, we're going to do that on that small chart, but here's the thing. If I go to that small chart and I see 3 divergences in the same price range, I see 3 losses of momentum from a high, from a low, 3 cyan lines, 3 magenta lines, guys. This is my small chart showing me change that I can't see on the large chart. 3 divergences in the same price range may terminate the trend. And 3 divergences in the same price range is the only termination condition on a small chart. And 3 divergences on a small chart is the only reason I will ever not take an entry if I have momentum and a clear path on the large chart. True story. So let's define our entries, guys. When the rules are met, I'm going to go to the small chart and I'm going to use a limit order to buy or sell a pullback in an area inside of triggers, guys. I'm going to go to the small chart and I'm going to use a limit order because I'm going to be precise. I'm going to pull this over and I'm going to buy or sell a pullback, that push that the small crowd creates, and I'm going to do it right at an area, fib mid band yellow 1-to-1, because these things are bouncy. But I want it to be inside of triggers, and this is kind of the thing. Triggers are where the market tends to return to, guys. On a small chart, those price bars very often return to the large triggers. On a large chart, those price bars very often return to the large triggers. It's the same market, it's the same price. So if you put your large and synthetic triggers one on top of the other overlapping, guys, you have the smallest space where price is most likely to return. Triggers are a correction point on both charts. So we've taken the large triggers from both charts and put them on one, large and synthetic, guys. So every time you're thinking of an entry, I want you to go through this process. The small chart price may retrace back to the large triggers, the smoother of the two. I have one-to-ones and a fib inside of those trigger lines. These may produce a bounce. But I want you to say, this isn't my guaranteed, because price may also return to the synthetic triggers. Those are the large chart large triggers. And I've got a mid-band inside of those synthetic triggers, and that may produce a bounce. And guys, I'm not a swami. I can't figure out which one of these triggers it's going to, and I'm not positive which one of these lines is going to create a bounce. So I'm going to give myself a range. I know that price may return to those triggers, and I know that the areas inside may create a bounce. And guys, this is where the accuracy and the precision comes from. Because what you're going to do is you're going to use that language. I'm going to buy or sell a pullback at an area inside of favorable large triggers, and you're going to define your entry point using the smaller, faster chart. So when the rules are met on the large chart, when everything is going up, when the momentum is its absolute strongest, when there's nothing in the way, I'm going to wait for the small crowd to fight, guys. I'm going to wait for that reversal bar on a smaller, faster chart. For you guys that are posting in the room, I'm just going to give you a subtle little reminder here because I see them coming through. Every time you post in the room, guys, please do me the favor. Write on your chart. Define your momentum. Talk about your path and make sure that you show me your entries because I know that there's a lot of stuff going on. Do that for me. Guys, we're going to wait for a reversal bar. The reversal bar signals the beginning of the pullback. The reversal bar is not your entry. When I was teaching my wife this, my wife jumped in right here every time at the bottom of that reversal bar. And she said to me, well, you said wait for a reversal bar. I was like, yeah, but you stopped listening right after that. Once the reversal bar happens, you've got to locate your triggers, large and synthetic. They should be one on top of the other like two snakes riding piggyback. This is what makes them favorable because this is where the market is most likely to return. But you have to go one step further. You have to say the trigger lines are not my entry. My entry comes from an area inside of favorable triggers. Because this is my bounce point, guys. Those price bars are a tennis ball, and those areas, as those are the brick wall. And it may go from the highest point and it may go from the lowest point, and I'll never know. So I create a window of opportunity, as I like to call it. Sometimes I call it the woo, because I'm a big Ric Flair fan. Guys, from the highest point of support inside of favorable large triggers to the lowest point inside of favorable large triggers, this is precisely where the market is most likely to continue. This is where my entries happen, and my limit order goes a tick or two above the highest point of support because my large chart has momentum and a clear path, guys. I don't know if they're going to make it that far down, so I'm not going to trip over a couple pennies hoping to make a couple extra dollars. Guys, your entry goes above the highest point of support inside of favorable large triggers. Any lines below the trigger lines, and I want you to think of what the trigger lines are. The trigger lines are where price is most likely to correct. The areas are where price is most likely to bounce when they're inside of those trigger lines. So any line on the wrong side of those triggers, below the triggers for a long, guys, this is outside of the window of opportunity. This is not where I want the market to go. This is rarely where the market ends up if it's going to be a successful trade, guys. This is exactly where the market should not go. In a short trade, everything's going my way, so I'll wait for a reversal bar. But I don't enter on the reversal bar. When it prints, or even sometimes when I get better, as I'm waiting for it to print, I start looking for those favorable large triggers, one on top of the other, two snakes riding piggyback, and I say to myself, you know what, those price bars are likely to return to these large and synthetic triggers. I wonder if there's anything for it to bounce off of. Preposition at the end of a sentence. Guys, there's a mid-band right in the middle. That mid-band represents the point where the small crowd is most likely to fail. That mid-band represents where the market is most likely to continue with the direction of the trend. Your entry order goes 2 ticks below that mid-band. And if the small crowd has it in them, guys, you're in a short trade with every advantage you could ever hope for. Any line beyond those trigger lines, on the wrong side of the triggers, above the triggers in a short trade, guys, this is where the market shouldn't go. This is past the correction point. This is past the area that should create a bounce. And once you can pinpoint where the market is most likely to continue, ladies and gentlemen, you know exactly where the market shouldn't go. This is management. This is where your initial stop goes. Typically 4 or 5 ticks above or 4 or 5 ticks below those trigger lines. And guys, you're going to get hit. You will get stopped out as a day trader. You will take losses as a day trader. You have to be okay with that. I try to be very, very clear on the idea that you'll never know what the market's going to do. You'll never know whether it's going to go up or down, whether there's going to be a spike or a fight, guys. But the one thing that you can be certain of with a little bit of study, practice, feedback, is that when you have momentum, a clear path in this clearly defined entry area, you're taking a pattern that has been proven through historical study to win more than it loses. Typically 70 to 80% of the time, which means every time you take this trade, there's a 20 to 30% chance that it's going to hit your stop. But there's a 70 to 80% chance that it's not. Your initial stop goes where your advantages are gone on the other side of the triggers, guys, but very often you're going to get a confirmation bar, a reversal bar in the direction of your trade, and your new stop will go 2 ticks above it. You're going to reduce risk because they're telling you that we're going short with all the momentum and direction, or it'll go 2 ticks below. And guys, it's not uncommon at all to see you take amazing entries, to see you guys taking the best of the best, these awesome rock star entries. And then you get that reversal bar and you're like, whoa, this is amazing. Everything's going exactly the way I want it to. And then the small crowd ramps up and pushes, guys. And from your best of the best entry and your awesome stop placement, you turn what could have been a $300 to $400 loser if you relied on your emotions into a very small $50, $55 loser. Because you had a plan, because you understand where the market shouldn't go. So I'm going to ask you guys, what do you think? Odds favorable momentum? Get that clear path? Pull back to an area. This is your recipe for success, brand new users. This is the best of the best. On your large chart, it's just one bar. Very often you're going to see the rules met in one of these tails. Guys, go back and circle these tails. And if that tail lines up with support inside of favorable large triggers, or that tail lines up with resistance inside of favorable large triggers, you have the best of the best trade, ladies and gentlemen. You have the perfect scenario. And you'll be able to go back and circle these tails, and it'll allow you to study. Look at this, pullback right to support, right inside of the triggers, and it's the tail on the large chart. You guys see that? So Mike, when we talk about the best of the best, I want you guys to look at this chart right here. This is what it looked like when the decision was made. Does everybody see odds favorable momentum? And does everybody understand that that's only the potential to break? Because these are the things that you have to work through. Guys, whenever it's only potential, you're going to start asking yourself some stuff. Am I coming from one of those strong bottoms? Those impactful decisions that reverse the market? If you are, it's great. Do I still have momentum on both of my charts? Absolutely. Can I define my area and minimize my risk? Without a doubt. Mike, this is your look for the 50-50 trade. This is your look for the 50-50 trade. And it was perfect. And I guarantee there's going to be some people that show me this winner. I hope so. I'm going to be upset if I don't. But guys, what you've got to do is you've got to study these. You've got to learn these. You've got to believe in these looks. You've got to create trust so that there isn't any doubt or hesitation, guys. We just learned the Fibonacci rules for when it's okay to trade. 6 minutes until high impact news. You guys know that you need to simulate, that you need to practice, that you need to annotate charts, that you need to submit those charts for feedback to make sure that your reads are accurate. You need to know what you're doing right and wrong, guys. That's the magic of what we do here. And then you've got to commit these looks to memory through taking pictures, through going through annotating charts, guys. And this is where all of the gifts come out. This is Chart Reading 101. Most of you won't do this. I fully understand that. Most of you won't go out and take 25 pictures of strong triggers, and every one of you that doesn't are more likely to take losing trades with weak triggers. Most of you won't take pictures of weak triggers, and you're more likely to lose those trades because you don't know what's up against you. Same thing with clear path terminations, entry areas, guys. You've got to go take these pictures. You've got to commit these looks to memory so that you recognize them quickly. And then don't just take the pictures, annotate your charts. I can't stress enough how important annotation is. Guys, when you annotate your charts, when you have these looks, and let's find one here. We'll just click on a random. When I have odds favorable momentum down, I'm looking to sell fib resistance on the smaller chart. Horrible, horrible spelling. Look at this, small below the large. They're all red. Space between means strong. Momentum rule number 1 met. Is there anyone in this room that believes they could take this picture and write these words 25 times and confuse this look right here for this look right here? Smalls inside, scissors open, scissors close. Guys, take advantage of the tools that are being given to you. These have been put in place because I've been helping traders for the last 5 years, and this is one of the things that's going to get you where you want to be. And if you're brand new and you're not sure, I don't know what strong triggers looks like. I didn't pay attention in that first hour. How the hell do I identify a termination condition? That's ridiculous, guys. I'm giving you the high probability trend trade checklist. This is a checklist to put you into the market. The first thing is the market coming from a strong top or bottom? It's not mandatory. It's not one of the 3 rules, guys, but when that termination reverses the market, the trades that set up after it are more likely to work. Not more likely. Have a higher probability? It's one less thing against them? I don't know how to say that. It optimizes your chances of success. Let's use that one. So that 50-50 trade that we just looked at, guys, because it came from a strong bottom, it had a higher chance of winning than if it wasn't coming from a strong bottom. Momentum is the same look on every chart. Separation between the small and large. Commit this look to memory, guys. There are trading plans built solely on momentum. Weakness will always be weakness. If price reaches the area and none of the triggers break it, it'll never be a clear path. Can't be, won't be. Rule number 2 is not met. If only the smalls are through the area, guys, it'll never be a clear path. It's only the potential to break. Your area is not broken until the small and large are through. And let's define entries, because great entries create manageable trades, guys, and that's exactly what's on this. The four rules, 3 rules, 1 bonus, every one of them defined, and then a checklist for you to print out and put onto your desktop. Police yourself. But more importantly, write these words on your chart every time you take a trade. And the cool thing is that if you get in the habit of writing your rules on the chart, you're going to know whether or not you followed your rules or whether or not you broke your rules. You're going to understand whether you had advantages or whether you were up against disadvantages. And again, I'm going to say it pretty loud. If you speak to yourself out loud in terms of advantages, rather than I hope it goes up or I wish it would go down, if you say, I have momentum out loud, your brain gets excited. And if you say, there's nothing in my way, your brain starts chomping at the bit. And if you go, holy crap, there's an area inside of favorable large triggers, you know you have a trade that typically wins 70 to 80% of the time. This is your best of the best, brand new users. And as soon as you deviate, it's no longer a high probability trend trade. Mike will talk about that with the picture that you just posted. Once you deviate, you've got to rethink your management. You've got to double check your entries. You've got to make sure that you're solid at what you're doing. So I'm going to give you guys a plan, because trading without a plan is just ridiculous. Trading is a business, and businesses require business plans, guys. And this is your business plan as a brand new user. This is the KISS plan, the Keep It Simple Sunshine plan. This plan is a stepping stone in your learning journey. This plan is the beginning. This plan assumes that you know very little and that you're learning to read your indicators. So this plan is designed to optimize your chances of success, to give you the best of the best chance of winning your high probability trend trades. And then through simulation study, class feedback, and continuous practice, you will be empowered to craft a plan, and it will be tailored to your personal goals based on your experience reading the indicators, guys. AI put that together. It's pretty wordy. Once you can read your charts, you're going to see opportunity. The KISS plan isn't designed to make you rich. Ron said this. I'm stealing this, Ron. I'll send you a nickel each time. The KISS plan is designed to make it so that you can see the other trades that probably will. The KISS plan's just the beginning, guys, and your simple plan for consistency is 100% dependent on your ability to define your entry, to find the best of the best entry, to get into the market where the market is most likely to continue, to reduce your risk by waiting for the pullback, to increase your profit potential by getting in at the area where the market is most likely to continue, because once you can define your entry, guys, you know where your first stop placement goes. It goes where the market should not, on the wrong side of those triggers, typically 4 to 5 ticks. One of my favorite things, I did some study because, guys, I just go and look up stuff all the time. And I literally Googled, how do I know when I'm getting good at this, essentially. And one of the things that it said, and this was repeated all over, was you manage your risk before you manage your profits. You take care of losses before you take care of getting paid, guys. And we do that here at Nexgen, teaching this methodology by insisting on momentum. Because when I have momentum, the market's more likely to push in the direction of the trend. And I manage my risk by not trading into termination conditions, because termination conditions can stop the market. And I manage my risk by entering where the market is most likely to continue, because it allows me to accurately define my risk and remove the hope from my trading plan, but rather just say, if they come get me, good on them. They fought everything to come get me. So guys, my stop placement is the first step in active management. 4 to 5 ticks above the triggers. And I'm either going to get stopped out, and it's going to be part of that 20 to 30%, a normal part of a positive equity curve, or it's going to give me a reversal bar in the direction of the trade. Good morning, Andy. And if I get a confirmation bar, a reversal bar in the direction of the trade, my plan says I will move my stop 2 ticks above that reversal bar, 2 ticks below for a long. And then there's absolutely nothing for me to do. Guys, this KISS plan is designed to get you focused on following rules for both entry and management. I'm either going to get stopped out, it's going to be a small loss, it's going to be a pretty painless loss, or my first target's going to be reached. The other thing the KISS plan is designed to do, guys, is to get you paid. Getting paid breeds confidence, guys. Getting paid feels good. Getting paid develops trust. Getting paid dries up sweaty palms. Get paid. That's why we day trade, is to put money into our account. So in the KISS plan, your first target is $100 away from your entry. And with all of those advantages, this one's pretty easy to hit more often than not. And once it's hit, you're going to go break even. Because management's terrifying. You have something to lose. So we're going to take that something to lose off of the table. You've not only been paid, but now you can't lose, guys. And what this is designed to do is to get you to start trusting the idea that the large chart leads the way, that the momentum is screaming on the large chart, that the path is clear on the large chart, and your second target's only $200 away from your entry. Because we're learning how to collect money. We're learning how to get paid. We're learning how to trust the large chart, guys. And $200 is pretty cool, especially when you couple it with a $100. This is a $300 trade. First stop, second stop, and I want you to see something. Look at the fluctuations on the smaller, faster chart. Guys, this is an insignificant little move fast, no bearing on the world chart. It's just an entry chart. And these fluctuations are going to happen all day long. And if you keep your management very mechanical, it's going to help you not get caught up in those tiny little movements, guys. Your management should be just as mechanical as your entry plan, but you will craft a plan tailored to your personal goals based on your ability to read the indicators. And guys, the more trades you take, the more charts you annotate, the more you're going to begin to recognize when you have the ability to hold for bigger moves because your large chart tells you that we are screaming south with nothing in the way, and it creates an awesome opportunity for you to collect profits. It doesn't mean you shouldn't focus on getting paid, but guys, runners are wonderful, and runners change the whole dynamic of the game. But you need a little understanding on how to do it. So your entries for the high probability trend trade are right here in the spreadsheet. Your super mechanical management's right there. And I want to remind you that $300 a day, guys, if that's the best you do each and every day, is a $75,000 year. And $75,000 is an awful lot of money for 5 to 10 minutes of your day. Most of you are going to find yourself in this range. Once you get comfortable, once you get confident, once you have a plan, you're going to find that it's a lot easier to make money in the markets than you ever thought it could be. And guys, this is the highest probability trend trade. And before you go live, you're going to practice, you're going to get feedback, you're going to take pictures, you're going to annotate, and you're going to hit this point where you're like, man, I got this, I know this. I'm winning more than I lose. I'm finally not panic stopping. And you're going to want to go live. You're going to want to go to a prop firm. You're going to want to put your real money into the market, guys. You're going to test that plan that you've been practicing for the last 30 or 60 days. And you have to know why you'll enter a trade, and you have to know why you'll exit a trade. And you can't leave these off floating in the galaxy. These have to be hard and fast rules, guys, because rules are patterns that have been proven to win more than they lose for entry. And guys, management patterns are patterns that have been proven to reverse your position more often than they don't. Your process is what's going to yield the results. Your ability to execute the plan. That's what's going to yield the results, guys. So the rules help remove emotion. If I'm not trading in determination conditions, I'm not hoping that the line breaks. And if I'm not trading without momentum, I'm not hoping that those weak triggers continue it in the direction of the trend, guys. The emotion begins to go away because you begin to trust the patterns. So for the brand new user, focus on the high probability trend trade and learn how to manage it before you go to the next trade. And every lesson that you take from this trade will pay dividends on the next trade. But if you try to go too quickly, what happens is you begin to confuse them. You begin to enter a high probability trend trade using the rules for a medium probability trade. And you try to manage a medium probability trade using the rules for the high probability trend trade. So get really good at one thing and then add your second, guys. There's time to do it, I promise. And once you're good at the high probability trend trade, that's where this 50-50 trade comes in. Iron Mike, this one's for you. This plan and the KISS plan is designed to optimize your chances of success with the 50-50 as a new user. This is the most lost trade from new users, but this is also the most prevalent trade. This is the one that you're going to see more often than the others, guys. And then through simulation, study, class feedback, continuous practice, you'll be empowered to craft a plan based on your ability of reading the indicators, guys. So for the brand new user, and guys, I'm telling you right now, this is the best of the best. This is not the only way to take these trades. When you're a chart reader, you're going to find a way around some of these. But I'm going to tell you right now, in the beginning, one area not broken. When I have a 50-50 trade that's up against 3, 4, 5 areas, I've got 5 areas where the decisions might be made. My likelihood goes down. From a strong top or bottom, from a termination condition that reverses the market. Guys, we learned about this in the high probability trend trade. We learned about strong tops or bottoms because we know that anything that happens after there, it's like some warm fuzzies. It's more likely. Odds favorable momentum on both charts. Odds favorable momentum on the large chart. Odds favorable momentum on the small chart. Why? Let's talk about it. Let's look at the rules for a high probability trend trade. Guys, if I'm in a 50-50 trade, my clear path is already gone. And I think that you guys should print this out. Let me do this for you. Here, let me move this. Print this out. Put it on your desktop. Every time you're looking to take a trade, start chirping real loud. That was the wrong one there. Start talking about these advantages. Say them out loud. Or even better, print this sheet out with 3 little pieces of paper. And if you don't have a clear path, cover clear path. Because what does this do? It tells you what you're up against. But it also tells you what you should be focusing on. You should be focusing on momentum. You should be focusing on a nice low risk entry, guys. If I don't have momentum, why on earth would I just trust an area inside of favorable large triggers when nothing is going right except that one thing? If I don't have a clear path or an entry area, why the hell am I just going to trust momentum in the beginning as I'm learning this stuff? If all I have is a clear path but I don't have momentum, do you see how that works? Guys, what you're doing is you're training your brain to be pretty freaking smart. So, on the 50-50 trade, it's imperative that you have that momentum on both charts, that you make sure that you're not forfeiting a second advantage. This is very often ignored on the 50-50 trade. And then here's the deal. Divergence. Does everybody remember what divergence is a loss of? That's why I talk about it in termination conditions. Divergence is a loss of momentum. And if you go back to that super smart, amazing, oh my gosh, thank you for sharing this mark chart, and your clear path is gone, and then divergence is a loss of momentum, well, you might say to yourself, I don't think I want to take this trade. I don't think I want to rely on an entry area to carry me to the promised land. So it tells you no divergence. But if there is none, get in at the area. And then it reminds you, divergence, no trade. And then guys, when you go to manage this trade, it tells you if divergence prints, exit. Can anybody in this room take a guess? What is the biggest killer of the 50-50 trade? What's one of the biggest reasons that a 50-50 trade fails? Divergence. Kurt, you are a prize pupil. I want you guys to see what just printed on this 50-50 that failed. Twice. With no divergence, there was room to make a little money. Once the divergence printed, that ability was gone, guys. Let's see if we can find another 50-50. 3:27 in the morning. That's early. I'm not up at 3:27 in the morning. This one didn't have divergence. This one also didn't have favorable large triggers, did it? This one also didn't have an area sucked inside of those favorable large triggers. So I have momentum, but I don't have a clear path, and I don't have a good entry. Why would I give up 66% of my advantages? And guys, if you talk to yourself in terms of advantages, it's going to pay huge dividends. So, what's just happened in the last hour and 11 minutes, guys? We've gone through the path. You now have the rules for when it's okay to trade, for when the advantages are present, guys, for a trade that wins more than it loses. We've broken them down individually. We've looked at strong triggers all by their lonesome and termination conditions and entries. And I've given you a sheet so that you can study them, so you can go back, so you can become great at them without ever having to take a trade. You can go do that study process and get good at these things. Nexgen's provided you a platform where you can get feedback every day, 15 hours a week, live. For every picture that you post in the room, we will talk about momentum, clear path, and entry. We'll look for ways for you to get better entries, lower risk, higher profits. We'll identify problems. Guys, we will celebrate all of the victories. You've been given a spreadsheet, almost 400 pictures for you to study, a lot of opportunities for management patterns, all those sort of things, guys. When I told you this morning I would give you everything that you need to be successful, everything that you could possibly hope for to be successful with the software, you now have it. You own it. It's yours. There it is right there in a zip file. Labeled everything you need. All of those KISS plans, high probability trend trade checklist. Guys, you've got my PowerPoint that I teach the room with. You've got everything that you need to be successful. The only thing that Nexgen can't give you, the only thing that I can't provide you is experience. I can't make you do the work. I can't make you take the pictures. I can't make you participate in class. But I'm telling you through my own experience, through my own failures, that is the fastest way to get to where you want to be. So if you're serious about consistency, if you're serious about wanting to get good at this, if you're serious about turning day trading into your job, guys, you have everything you need to make that happen. And now the ball's in your court. Now it's up to you. So I'm going to take 5 minutes. I'm going to walk around the house. I'm going to high five my dog. Man, I sure hope YouTube is recording because I had it muted, I think. I'm going to let it run and we'll go to the end and we'll find out. I'm going to take 5 minutes, guys. Look at that. Momentum can break areas. It's just a fact. Weakness can cause big, ugly retracements. It's just a fact. It doesn't every time, but it certainly can. So it's about statistical advantages, guys. When I come back, we're going to look at your charts. We're going to talk about what you saw. We're going to answer every question that you have. The only thing that I ask of you guys when you post in my room is that you tell me what you see. That you identify momentum, clear path, and entry area, that you talk about it, that you show me the trade to completion so that I can give you the best possible feedback. I will not beat you up, but I won't let you get away with breaking rules and not mention it. Even if it's a part of your plan to break those rules, guys, just so you know, this is an educational room. So I'm going to go back to the 3 things every time because there's some of you that are willing to trade in termination conditions, and it doesn't bother me in the least bit. It's your plan. But every time you post that, I'm obligated to say, Pete, you traded into a termination condition. You did not have a clear path. Even when you win, I'm still going to say it. And then I'm probably going to say, but I noticed that you had momentum everywhere, that there wasn't divergence, that you had the perfect entry, you knew right where your stop went. Pete, what an amazing trade. But you did, in fact, trade into a termination condition. Because I want Nanda to see that termination condition, right? I want Sid to see it. I want all my new users to understand that that was not a clear path. So don't get butthurt if I call something out on you. It's not that I'm mad at you. It's just that I want to make sure that everybody in the room gets exactly what they need. So go stretch your legs, guys. I'm going to take 5 minutes. And when I come back, Made the S&P mad, didn't it? Woo! They are just going up. I wonder where they started. Oh, look at that. It all started right at a termination condition that reversed the market. That's kind of cool, isn't it? You guys knew about that. All right, so I'm going to go and we're going to start. Man, terminations again. This stuff's wonderful. I love it. I'm going to go click on the pictures you guys have been posting. We've got quite a few, so there should be a lot of great lessons in here. Just a little warning, sometimes I'll take your chart and turn it into a lesson that you don't need. Be okay with that. Don't feel like you have to defend yourself. You don't. Everything that I do is for the benefit of the whole. So sometimes you'll get a lesson that you need, and sometimes you don't need that lesson at all, guys. Be okay with that. So this is Cav, and Cav says, man, triggers are piggybacking with the mid-band inside. Price pulls back inside of the triggers, got in and reached the target. I love these. When you point to your entry here, but actually you got in there. And I think what Cav is saying, because I speak pretty fluent Cav, got you, Wayne. Is Cav says, check it out. With all of the momentum and I got above trouble, I don't mind getting into the market right here. Doesn't bother me a bit. I'm a chart reader. I'm good at this. I know what I'm looking for. And I also understand that if it does retrace against me, this area inside of favorable large triggers, using the language once again, well, this is where the market's most likely to continue, and I don't have any qualms about holding my position and keeping my stop where the market shouldn't go. And he goes straight to his target. And he goes right to his second target, and then he does the exact same thing. When it retraces and doesn't make it and everything says up, I can get in and take advantage. And Cav, this is some outstanding heads-up trading. There's the second half of it right there. Beautiful trading, Cav. Going with the path, going with the direction, going with the momentum, and not feeling like you have to make every dollar every time, guys. This is amazing. And that's not so bad. It's his exit is at 833.01 and he's over $500 in his funded account. Great job. I love going sim. Once I reach my goals, I'm sim. Guys, I was so up on my goals. This morning was great in the NASDAQ. I was up a little over $1,000. So I'm like, all right, that's it. The rest of it's study. Now I'm going to study. Now I'm going to get better so I can reach my goals quicker tomorrow. Cav, what a great job this morning. Guys, once you understand momentum and path, you will find your entries. You will find a way to make money, and it probably won't be the high probability trend trade. So don't be the trade police. Learn something. Notice that all of these tend to have momentum and path, guys. And this is from yesterday, Pete. Right? Is that yesterday? No, that's this morning. Same thing though. Fake out, breakout. What was it? It was a 50-50. It had divergence. And Pete says, man, that's my least popular look. And you finally got out, and it looks like you didn't lose any money there, Pete, and that's kind of a good thing. I like 50-50s, I really do, especially from terminations. This market had been bouncing between rule number 2 not met for a while though. And one of the things that happens, and we talked about this yesterday, the fake out breakout, when you've been consolidating for a long time, very often either the buyers or the sellers will look like they just won, and the sellers were right there going, haha, suckers, and stomped them. And Pete realized that. He goes, man, I'll take a shot. It's the breakout. If it wins, it's going to be amazing. Stops in place going, and he goes, wait a minute, lower divergences, things are changing. They're not going to let it happen. And look how his large triggers roll. And he goes, they're going the other way. And guys, this is experience. And Pete says, I'm going with them. Beautiful. Beautiful, beautiful, beautiful trading, guys. This is chart reading, understanding the expectation based on the pattern, and when the pattern fails, understanding that there may be an opportunity. It's a little advanced, but Pete puts on an absolute clinic with that one. Just a quick base hit, weak top, out of nowhere, triggers roll, separated, And guys, I want to go through the chart read again on this one. Because what Pete did here is Pete said, okay, that's not the best top, and I'm trading into this mid-band. And because I hit the mid-band and the large triggers are a full bar away, there's a really good chance that those price bars are going to come back and hit that mid-band, and then decisions are going to be made. Once that gap is filled, decisions are going to be made, and I want you to see how his chart works here. He knows exactly where it's likely to retrace. And he says it could go down from here, but he doesn't just jump in arbitrarily. He says, I'm going to let it go down from here, and I'm going to ride it right back to trouble. And man, this is nice. This is a good one, Pete. I like it. I would have been even happier with divergence, to be honest with you, to push it down. Divergence for me would have been awesome. No divergence here would have been what I wanted to see. Great job. This is just a question. We had 4 divergences to the downside, which says no more shorts, and then a divergence to the upside. What effect does it have on this? Not a darn thing. Not a darn thing. Guys, 3 divergences is a termination condition. 1 divergence down doesn't negate all of it. But what it does say is it says we're losing momentum, we're losing momentum, we're losing momentum. Hey, what's going on, Mike? We're losing momentum. Everything is below 72. All my triggers are aiming down. They keep trying to push up and can't. Notice that there's not a loss of momentum here. There's not a loss of momentum here. You're witnessing this huge fight right at key areas, guys. Somebody's going to win. What this divergence tells me, Pete, is that now the sellers are getting interested in stealing the momentum from the buyers. The same way the buyers stole it from the sellers. It's not a trade setup. It doesn't mean that it's going to break lower. But if I get this divergence and we start to get below there, and maybe another one, it's showing that fight. Does that make sense? Like it makes my ears prick up a little bit. I get a little, okay, what's going on? But I'm not jumping in because of it. Triggers rolled, odds favorable from a weak bottom, up, separated, all kinds of termination conditions, but I felt the triggers were strong enough to break. So he takes the perfect entry right at the area, right at the triggers, and he gets out of trouble. It did this time, didn't it? It did this time. Guys, don't let your memory be short-sighted. Don't remember the one time trading into a termination condition got you paid. I know, but now I have to say it. Remember the 20 times that it didn't, right? And trading is based off of a sample. 20, 30, 40, 50 trades, and you develop these odds. And I know you're messing with me, Pete. And I like that you mess with me. Guys, it's a pretty laid back class. You can pick on me. I'll pick back. Once I get to know you, I'll pick back. I'll still say, just for the whole room here, man, don't do what Live Edge Trading does. Are you still in here, Mike? One of the things that comes with experience, guys, is a different trading plan. And the better you read your indicators, the more you're going to see, the more opportunities you'll see. And there will be people in this room that take trades that look like it is the craziest trade ever. And you'll be like, why did they do that? It's going against everything. And they might be looking at something that you don't see. They might have something going on that you don't know. Don't try to be somebody that isn't you. And don't judge people on their trades. Everybody has their own plan. Cav says when a termination reverses the market and I'm on the business side of these small triggers, I'll take a shot to get up to that resistance, to get up to that mid band. Termination, we learned about those. Triggers roll, we learned about that. Odds favorable, we saw that one too. Areas that may stop the market. Cav's killing it. I love it. Pineski. That is a termination condition. You are absolutely right, my friend. Did it break with those strong triggers, Paul? Somebody help me out. Did 7086 break with those strong triggers? Oh, Pete, it didn't. I'm gonna mess back, Pete. It sure didn't. Well, it did eventually. All right, let's see what's next. What a great termination condition. You know what? I could probably steal that picture because that's textbook. And I could go to my spreadsheet and man, I'll drop that into my termination conditions. That's probably pretty good for study. There we go. One more to make me that much smarter. Thanks, Paul. All right, Wayne. 1, 2, 3, 4. And then the fifth one. I can follow directions. 1, 2, 3, 4, 5. So that should be the first one. Let's get busy. All right. Smalls up on NASDAQ, large down, gap theory in play. Pulling back to the midband, trying to get me go long, but gap theory said wait. Amen, guys. Another picture for when the rules aren't met. Price reached 1-to-1s in the midband. The large triggers are a full bar away. We know it's likely to suck back into it. And Wayne says, I'm not going long at a midband. What do you think? I'm crazy? I'm going to wait and see what happens. I like that. That's a great picture of not taking the trades. Pull down, large triggers, indicator to go long. Gap still says no. And you're going to miss a few like this, right, Wayne? Sometimes it's just not going to close the gap on you guys, but the pattern is more often than not it will. And you've got to be willing. And there's nothing worse than going, oh, I'm just going to take it anyway. Changing your thinking. And then you get stopped out. You're like, son of a gun. I should have just gone with my gut feeling. And look at that. Right through it. What a great picture. The whole process. And then when it gets down to those triggers and decisions are being made, I don't know what pullback to the large triggers means. Because this says down, that says I don't know. And it did. It went back to them. And it's just bouncing in between the two. Let's see what the last one does. Sure enough. How is that an entry point at the large if they're going up? This is the one part, Wayne, where I'm not sure I agree with you completely. This was what it took to finish closing the gap, but I don't know that there was a trade with all of your indicators up on these charts and them down on this chart. There's a huge indecision point. It's literally like a vacuum in between those areas and the triggers. Maybe this is a pattern you're working on, right? Could be. I don't know. Well, what are the rules? I'm not 100% sure what it is that you're looking for. So let's go through it. Let's go back to the first one and talk about it from a gap theory standpoint. How's this? So check it out. We hit the areas, gap theory down. All right, Mike, you know the rules though. You got to put the Y's on your chart. Gap theory down. Let's see. We've got some indecision here. We're on the good side of the triggers here. I want to go through it. There's your white bar, Wayne, off of the termination condition. And there's your pullback to the HVA off of the termination condition with room to close the gap. That was probably your short right there. Smalls below, termination, gap theory. This would have been where I was probably looking for it. Well, so Wayne, this is where, man, you don't want John's entries. So let me go through it. This is what John's talking about. Termination condition, small triggers roll on the large chart, and then you pull back to the small trigger. So it's term, smalls roll, sell the small. That's all large chart stuff, Wayne. They never rolled. So we missed that part of the equation. Does that make sense? This is why we post the pictures. If you have ever handed me a rule, I've messed it up. And that's exactly it. So you want the smalls to roll. And the cool thing is when the smalls roll, that pullback looks like a pullback to the large triggers, which have rolled down. Yours are still up. And I wonder if, so like right over here, who showed me that picture earlier? Check this out. This is it. This is it. I love it. Termination, smalls roll, pull back to the large, because this coincides with that right there. Does that make sense? Oh, this is awesome that we had an example of it. It's subtle, right? It's subtle until you commit these looks to memory. Great stuff, but that's what you were talking about. And that was at textbook. I see exactly what you were thinking. Great stuff, man. Thanks for posting those. I love the idea that you posted them all in a row and that you just started snapping pictures. I know this. I've seen this. What is this? How do I use this, right? And then you did me the honor of posting it in the room. I want to share this one with you. I did the same thing here. And guys, I want to show you what your brain will do. Wayne, this has nothing to do with you. So I'm looking for the long. Everything on my chart says go long, and I don't go long down here. And I'm like, I'm going to look for the long when things roll, right? And I missed my HVA trade. That's okay. And everything's up, and I'm like, oh, and I'm getting that fear of missing out. And I get into this trade. And I'm saying to myself, this isn't the right trade. I know this isn't the right trade, but I don't want to miss the trade. And I literally jumped into the wrong trade. And then it comes back and it did everything that I wanted it to do to give me the proper entry. I was so exhausted from all of this nonsense, and I hate to admit it. Where did it go? I take so many pictures that I actually missed the right entry. When I went through all of that and broke my rules and rethought it, but I think the thing I wanted to show you in that picture is that it took me 15 seconds. It took me 15 seconds to change my mind because I wanted to be in a trade. And guys, everybody's going to do that. So when you take these pictures the way Wayne did, where you put them in there and you really analyze them, it buys you that patience that you're looking for more often than not. All right, Paul, let's see what you did. Termination, 50-50, no divergence, bottom of the window where he can manage risk. And there you go. Once again, Iron Mike, that's how you take the best of the best 50-50. The highest chance of success. When a strong bottom, termination creates a reversal, gives you momentum on both charts with no divergence and an easily to define entry area that isn't high risk. Guys, that's the best way to take a 50-50, and Paul absolutely nailed it. So what I would do if I were you guys is I would take this picture and I would go here and maybe drop a link, and what could we call this? What's something clever? How about Pinieski's perfect 50-50? That's a good one. Uh-oh, that happens sometimes. But that's the one. If you were following the KISS plan, that does it to the letter. To the absolute letter. All right, Nanda. Why the large chart shows red line, but the small chart shows blue line? Thank you for asking that. Are you ready for another great lesson, Nanda? One of the things that I never mention when we talk about termination conditions is the color of the fib. Have you ever noticed that? I never say when the fib turns blue, it's now support, or when the fib turns red, it's now resistance. Nanda, your termination conditions are 100% defined by the location of the trigger lines. And I think that this creates challenges for some people because they get caught up on the colors. So let's go through it on this one. Let me take a picture. I'm going to change these lines to pretty pink lines. And I'm going to do this for a reason. So these are my Fibonacci areas, Nanda. When price reaches it and the triggers remain above, it's a termination condition. It's that simple. It has nothing to do with the color of the line. When price reaches this line and the triggers don't break, it's a termination. When the smalls break through, it has the potential to break. And when the large get through, it's broken. No matter what color. No matter what color these lines are, whether they're pink or yellow or orange, they could even be black. We're going to let the trigger lines tell us the situation going on. So what happens is when we look at your picture, so the smalls have absolutely smashed through, but the large have not. And what your trigger lines are telling you right here, Nanda, is that this area absolutely positively has the potential to break, no matter what color it is. And then when you get that pull back to the mid band with the potential to break, coming from a strong bottom with no divergence, strong triggers on both, the color has nothing to do with it. These are just areas. Colors are put in there because they appeal to the human brain. Does that make sense? Let your trigger lines define it. Don't get caught up on the colors. Because I know there's a lot of people that go, oh, this is support, I have to go long right here. Well, no, that it's not, because the triggers haven't broken. Does that make sense? I love that lesson. I had to learn that lesson too, because once these things started changing colors, I believed in my heart of hearts that I was invincible as long as I was on the right side. Great stuff, man. All right, Ron, Captain Consistent, termination, full reversal, odds favorable. And Ron says, I don't know if you guys knew this. Man, there we go. I can't see the first one. I can make money between here and there before I get to trouble with odds favorable on both charts. And then, because lines create problems, because lines are where decisions are made, because lines are where fluctuations happen, I'll just wait to get above the line with a clear path and I'll do it again. And guys, base hits, pay bills. And I'm going to jump ahead real quick and I want you to see something. Odds favorable. Everything says down, room to the target. Let it clear, get in, get out. Same gentleman, same trade, same concept. Guys, the most consistent traders I know do the same darn thing every day. They have the same entries, they have the same exits, they have everything consistent because they know it creates an advantage. I love it. Nice work. All right. So, Mike, I'm going to read your charts here. Waited too long to get in. Small triggers came in, large triggers. All right. They had been in for 1, 2, 3, 4, 5, 6. Yeah, that's a pretty good wait. 6 bars. Initially, I tried to get into the mid-band, but price stopped inside of triggers. With the small triggers curling down, I lowered my targets down to profit area, took money off the table. I love this because it didn't reach the mid-band here, Iron Mike. You chose to get in here and it blew right past you to the mid-band. This is where consistency in action pays dividends. This is where having rules pays dividends. And you got in and you panicked. And you took your money off the table because you know that's not your entry, right? When you break your rules, it feels uneasy. And when it feels uneasy, you begin to move your stops, guys. And then it comes right back to the mid-band. I don't have momentum. I don't have areas inside of favorable large triggers. How did you know it was going to stop at the mid-band? And not, I don't know, retrace. Let's go back to it. I want you to see what happened in the market here. How did you know it was just going to go to the mid-band and not retrace bigger than like that with the weak triggers? You didn't, right? You were hoping that a mid-band free-floating in the middle of nowhere with weak triggers would stop that market. And Mike, I love that it did. And then you still didn't believe it and you panic jumped again. And man, that's a lot of work. That's a lot of work for 50 bucks. Would you agree? Didn't want to miss out on trade. This time price came back to mid-band. I love it. Mike, this is such a great picture. And your annotation is amazing because you said this was a bad successful trade. Should have stuck to the rules and waiting till it hit the mid-band and not worry about pullbacks to go higher. Made money but left money on the table. Oh, I know you were. Yeah, but Mike, you made $157 breaking your rules. Does that make sense? You made $170 or $57 and you didn't have the advantages that you needed to feel confident in the trade. And it worked this time. That one inside of triggers worked better. That one absolutely whipped your ass if you tried to do it. And then if you tried it again because you believed that it should go up, it whipped your ass again. And then if you tried to go short, it got you. So I like when you guys celebrate these wins, because celebrating wins is great, guys. Winning is absolutely amazing. It is. It feels good. But the goal is that you are taking trades that have been proven to win more than they lose, that you're taking trades that fit a pattern, because these short-term successes very often lead to long-term failures. And that's what we try to avoid. And that's why I rarely high-five you guys when you give up all your advantages and you still get paid. And I have to go back to these lessons because I want you guys to stick around. I don't want you to leave my classroom. I want to see you for the next years. I want you to come in and tell me how successful you are. So when it feels like I beat you up a little bit, and I'm not doing it because I'm angry, right? This mid-band in the middle of nowhere, I don't know if it was going to hold. A little confirmation bar. Have you ever heard that in the classroom, Mike? When it isn't perfect, if you really want the trade, force it to go in the direction of your trade. Force it to do it. And if everything's beautiful and it's going to go, man, it's going to go. Right? Same thing here. Weak triggers. Clear path. There's the mid-band. I'm not going to arbitrarily sell it, right? I'm going to force the market. If I feel like I have to take this trade, I'm going to force the market to go in the direction of the path. Because, oh man, look at that. It's still going up and it's still going up. Because once I'm on the wrong side of these triggers, Iron Mike, I don't have any freaking idea where that market's likely to reverse. It could be all the way up here. It could be all the way up here. And guys, this is a great example live in front of you. Luck feels good, right? Get lucky in high school. It's nice. But look how that mid-band didn't hold. Does that make sense, everybody? And I don't know where it's going. Look how far beyond. Where do you put your stop? Where does your stop go when you don't have triggers to put it behind? So, wow, thank you S&P for the wonderful lesson. And now we're from a bad bottom right at the mid-band. And there's Wayne's gap theory that he talks about. Good stuff. I love it. These are the lessons that I love, guys. These are the lessons that I love. And if you guys don't post them in the room, we don't get to have them. Sometimes people will come in the room and not give you a lick of information. Short. Well, no shit, you're short. We can see it. Why? Why are you short? That's what we got to ask. I can see you're short. Why? I know why, but you guys don't, right? Wouldn't it be crazy to try and go short just because someone posted an arrow and said short? There's a lot more to this trade, guys. So sometimes you're going to see people do things that don't make sense, but I promise you they have a reason. And I'll tell you right now, Mike has a reason for everything that he does. Live edge trading. And not everybody understands it, and that's okay. Did the gap theory close? Oh, look at that. Wayne, thank you for teaching me that. Ah! Not all of my trades I do on my big account get mirrored into. Sometimes there just isn't time. This is MT5. These are some shorts I took this morning. In this account, the max on any trade is 25 contracts with 5 at a time, so I have to click 5 times to get 25 contracts. Pretty inefficient. It's okay if the market is working with you, but when it goes against you, it turns a winner into a loser. Right on. That's kind of interesting, isn't it? Seeing it on different charts. Thanks for sharing that, Pete. I like it when you show your other charts. Guys, there's a million ways to do things. There are a million ways to do things. Not all of them are NinjaTrader and Nexgen. But I think what you'll find is that what we teach, you can use and pay dividends. All right. Can you guys hear me okay? Give me a Y if you can hear me. All right, cool. So this is Rob. What's my pet peeve, guys? My pet peeve is not telling me why. Rob, can you hear me? I think he bumped out. He's going to bump back in. And let me show you why, guys. Let me show you how it becomes difficult for me. Didn't take pick fast enough, got in at 68.50. This is 57.60. This is 68.50. One tick below the potential to break and not coming at areas inside of favorable large triggers. Rob, I'm not going to lie. I don't have any freaking idea what you did here. It doesn't make sense to me. Now, if you had told me I had odds favorable momentum, the potential to break, and I was looking for an entry and a pullback to an area, that would be cool. This is very, very misleading because where your arrow is directly in determination conditions, and the price that you gave me doesn't exist in this location. Does that make sense? Like, I'm sure it's a great trade, but I don't have any idea what you did. And I'm not beating you up. But now we have to play a guessing game. Did you trade directly into a termination condition because of momentum and hope that it would break? Well, it does to me. Because I follow your arrows to see what you did. So I don't have an entry, I don't have an exit, I don't have rules. The only thing I see, Rob, is the potential medium probability trend trade setting up. Does that make sense? How can I give any feedback on this? That's fine. But again, I don't have rules. I don't have entries. I don't have exits. One of the things you can do, Rob, is you can lose the arrows. You can go through. There's a lot of styles for it, for the call-outs and stuff. You can whittle it down so there's no arrows to avoid confusion. But I think what happens here, and this is just me pleading for a little help, is Rob, you're telling me that you got in right here. And you're telling me that you got out. Oops. Let me delete that. You're telling me that you got out at 71.50. I don't see, well, maybe it went there. So this was your trade, yes? How would I know that? Maybe I was thinking you got in at 68.50 here. So that's all I'm saying. Great momentum trade, dude. Great momentum trade. Great job taking profits. Help me with the annotations so that I can give you some feedback and coaching if you need it. Stopped out. Okay. Momentum. I like it. Bad top. No areas inside of favorable large triggers. That's okay. But you don't even have entries and exits on your chart. Rob, do this for me. This will help tremendously. Oh, okay. We just figured it out. Gap theory worked. Right click on your entry chart for me, Rob. And this will help a lot for when you don't get the pictures taken fast enough. And go to data series and scroll to the very bottom. And guys, if all of you do this, you don't have to circle your entries and exit. I'll see exactly where you did it. So from data series, make sure that text and marker are marked. And then what happens, Rob, is I can see your entries and exits even if you can't take a picture fast enough. And I understand completely that you couldn't take the picture fast enough, but you telling me that you couldn't doesn't make it any easier for me to understand what the hell's going on here. So I have to turn this into a coaching moment. If you want the coaching, if you want the feedback, I have to know what you did. I have to be able to see what you did. Stopped out, my favorite annotation ever. What got you in? Stopped out. Did I have momentum? Yes. Did I have a clear path? Yes. Until the mid-band gets hit, because the large triggers are a full bar away. Did I have an area inside of triggers? No. So, can't be a trend trade. Momentum on both charts. Must be a momentum trade. You don't have to type all this out, Rob. This is me trying to figure out what you did. So I like it so far. I like what you did. Momentum trade, let the area clear, you jump in. The challenge is that's your loss of momentum. As soon as you get an up bar above these small triggers, that's your loss of momentum. That's a 2-tick loss, Rob. That's taking a momentum style trade, relying on momentum in a clear path, and then accepting that the momentum is gone. So instead of losing $25, you left $200 worth of risk on it. Does that make sense? I like the trade, dude. I think that you had it dead to rights, and you knew exactly what you were looking for, and you had the momentum to support it, and you had distance to the trouble to get there. And the only thing that put the fly in the ointment or the burr under the saddle or whatever you want to call it is that you didn't accept this as a momentum style trade, but rather you tried to manage it with this huge stop, and your momentum is gone. Does that make sense? What got you in disappeared. Your advantage went away. I hope that makes sense. I love the trade. I just think management would have been an opportunity there. Momentum, clear path, bought the pullback, took profits. Not quite a clear path. Directly into termination conditions. You get in directly into the termination condition, and you got paid. Nice job. Momentum, everything's down. It's the same entry as the last one. Pulls right back to the mid-band, continues down momentum. Great job. You don't need feedback. You know what you're doing. Cav, triggers screaming down, pullback right below the mid-band. Strong triggers, momentum, took a trade on the pullback at the large trigger. Got below the mid-band, trading into one-to-ones, but because of the momentum, willing to take a chance, and the chance worked out. Nicely done. Guys, that is the testicular fortitude that Simulator affords you. Nicely done, Cav. Everything says down with momentum, quick entry, quick exit. Look at that. No need to hold through that. Everything still says down. Clear the mid-band, quick entry, quick exit. I love it. Trading with momentum, trading to trouble, and then letting trouble clear and trading from trouble. What a great lesson there. Thank you for that. And guys, with that, we have concluded the tour that you have provided. This is the S&P. I have odds favorable momentum. I also have a clear path. I also have a mid-band, whoops, right inside of favorable large triggers. That sure looks like a good spot for a potential bounce. I'll put an entry a couple ticks above it, because my rules say that when I have odds favorable momentum, when I haven't reached an area, when I get a reversal bar, I should identify the area of support inside of favorable large triggers and know that this is where my stop will be if my order gets filled. And the only thing that I'll never be in control of is whether or not I get filled. Amen. Sold, took 2 off, stopped out second. Everything says down, the market's down, the path is clear. If you wait for confirmation, it's beautiful. And then Andy, did you see when the exact same look just a minute later failed miserably? One of the reasons why when I'm beyond those triggers, I love a confirmation bar. You guys do whatever you want. I am absolutely starstruck with a confirmation bar. Took the first trade based on the long. Price reaches a mid-band. Large triggers are a full bar away. Price is likely to close the gap back to the large triggers. Guys, any trades that you enter on the way back to that closing of the gap is likely to get run over. And from a bad bottom, Cav, you're lucky it didn't just continue down to the next area, because that's the pattern. And once again, testicular fortitude, guys. When you're on sim, you're bulletproof. Cav, would you take this trade like this live? Would you fight the gap theory from a bad bottom directly into the mid-band? You wouldn't. Your plan's solid enough that you can play around like that. You guys that aren't solid, that's the stuff that ruins careers. That's the stuff that starts building bad habits. That's the stuff that when you are live, you're like, oh, I forgot that I shouldn't be doing shit like this. And gets you run over, and then you blow out your account and you're back on sim. And then that testicular fortitude kicks in again and you make $1 million breaking rules. And you're like, I better go live because I'm really good at this. And then once you go live, the luck runs out. Guys, Cav's in a position where he's already reached his goals for the day, and he's just messing around because he doesn't have a tee time. If you're brand new learning habits, that stuff is hugely detrimental to you. Well, they hit our termination condition without giving us an entry, those jerks. Does that fit the rules? Odds favorable. The path appears to be clear. I didn't reach resistance. It pulled right back to support inside of favorable large triggers. I missed it because we just got there. My stop belongs about right here on that 2 lot. Where's my first target? If I'm in at 36, I have to make it to 46. There's our KISS plan, guys. Let's see what happens. It's either going to win or it's going to lose. I don't know. But I had an area. I took an entry. My stop's where the market shouldn't go. My targets are in place. It was a clear path. Does that make sense, everybody? Momentum, room, pull back to support, stop where the market shouldn't go. I've done everything that I can do at this point, and they got me. That's part of my 20 to 30%. NASDAQ 34, everything says up. You take the pullback directly to support inside of favorable large triggers. 36. Out with the weakness. Great trade, Wayne. And yeah, you did reload Ninja Script. I was looking, I was like, man, those aren't just a full bar away. Those are like 3 days away. Great trade. Great trade. Everything says up, he goes up with it. And yeah, if your triggers ever look wonky, reload that Ninja Script. They just stopped us out, didn't they? Jerks. Happens sometimes. You love, hate NASDAQ? I love the NASDAQ. I want you guys to recognize that I didn't hesitate to take that losing trade. Didn't faze me in the least bit. I'm not put out at all, and I'm not embarrassed to put it in front of you guys. I'm going to show you why. A lot of you will take this loser, and you'll never say anything about it. If you go through this process, and you say odds favorable momentum, yes. Clear path, yes. Area inside of favorable large triggers, yes. This trade pattern typically wins 70 to 80% of the time. This is the cost of doing business. This is part of the game. This is my 20 to 30%. Stop crying. There is no crying in trading. That's it. If your rules are met, take the trade. If the rules are met, take the trade. If the rules aren't met, don't take the trade. Guys, this is the pattern that wins 70 to 80% of the time. That's a small loss. That's 8 ticks, guys. That's virtually nothing. Jerry, I don't know what you're talking about on the ES. Where? I typically don't have the pink dots on my chart. Can you show it 57.89? See, I don't even have them on there. No. So Jerry, when I talk about areas for entry, it's fibs, it's mid bands, and I'm very, very adamant to say yellow 1-to-1s. Pink dots mean nothing to me. I don't have pink right here. That's not my entry, Jerry. These are what are called small swing 1-to-1s. And small swing 1-to-1s come from these tiny little movements. Let me get back to glossary of common terms, and I'll show you what I mean. On anything other than the NASDAQ, Jerry, I couldn't care less about those pink 1-to-1s. Couldn't care less. Because these small swing 1-to-1s, they're 100% projections, but these are 100% projections of the smallest, tiniest, littlest, yucky movements. Like, ugh. And every now and then they'll bounce just enough to make you believe that you should take trend trades from them. They overrun all the time. These are tiny little time frames. And then conversely, I love that word, you get large swing 1-to-1s. And man, these are from significant movements. These are from bigger moves that eliminate the moves within the moves. So if I'm on crude oil, if I'm on the S&P, man, it worked this time, right? Here, they never even came into play, right? Here, they absolutely got blown through both directions. Here, they lined up with the yellow 1-to-1s. That's pretty powerful. Here, absolutely decimated, overrun. There, it just coincided with Fibonacci support. Absolutely blown through over and over. So when I talk about these small swing 1-to-1s on the S&P, couldn't care less about them. Awesome. Cab, take care. On the NASDAQ large chart, I will treat them like they are fibs. Does that help, Jerry? And I think what happens a lot is, whoops, I accidentally deleted my chart. Guys, if you ever delete your chart, go to your workspaces and just close it. But when it asks to save it, say no. And then what happens is when you reopen that workspace, that chart will be there again magically. You're welcome, Jerry. Always always check with Jason, but if you can't keep it populated correctly, Wayne, try building a new chart. See if that helps. There may be something inside of the chart that's not working great. Yeah, Kurt, I love them on NASDAQ. On NASDAQ, I will treat them like fibs on the large chart because it's such a high time frame that it makes sense to give them that credence. But on a 5-1, man, those little one-to-ones can happen from these tiny little fluctuations. And that's why when we talk entries, I'm pretty adamant when I say fibs, midbands, yellow, one-to-ones. I throw that color in there for a reason because that's where the advantage comes from. That's an awesome question. Those are things that I don't cover normally. So when you guys ask those questions, it makes for a better class, and I really do appreciate it. Love to. Here, I'll go through it on mine. So NinjaTrader has to be closed. That's the first thing, is you can't have NinjaTrader open to do this, Jerry. So let's just do it. Let's close everything out. And let's pretend like it's the beginning of the day, brand new. So there goes my NinjaTrader. I closed it out. I'm 100% out of NinjaTrader. So when I wake up in the morning, I pet the dog because I think petting the dog is the most important thing to do in the morning. It just sets the tone for the day. Once I've pet the dog, I come in, I open up my computer, start it up. I close it down every night. I close my workspaces every night. And I'm going to go to my Documents folder, and I'm going to double-click on NinjaTrader 8. And then I'm going to double-click on Database. And inside of NinjaTrader 8, Database, the first thing I'm going to do is I'm going to get rid of cache, and I'm going to get rid of tick, and I'm going to delete both of these. And what this does is this kind of gets me, it's setting me up with fresh data for the day. So if there's something corrupt in there, I may have just bypassed it, and that helps for stability. Once I've done that, I'm going to go back to NinjaTrader 8, and I'm going to double-click on my temp folder. And in my temp folder, I'm going to delete everything out of here. And I'm not going to lie, I have no idea why, but John Novak told me to. So in the temp folder, I'm going to delete everything. Everything goes away from the temp folder. This is my morning routine, guys. Every morning, I don't open up NinjaTrader until I've done this. And then finally, I'm going to go back to NinjaTrader 8, and I'm going to go to my workspaces. And I'm going to get rid of the recovery folder. So I'm going to delete the recovery folder, or Delta. And then guys, if you have OCD like me, you do it on shutdown, Gary. Either one works. I will leave one untitled. So that way when NinjaTrader opens up, it doesn't try to open a workspace. And I'll delete the rest of them. That's just because I have OCD and I don't want to look at all these. So that's my morning every morning. And then once I do all that, once all of these are gone, and let me go back here, and we'll just do it normal. I'll hit Control A, and that'll bring everything up, and then I'll get rid of everything. And then, did I delete the cache and tick? I took pictures, but I may not have done it. Database, cache, tick, delete, and then I just get rid of that, and then I'll open NinjaTrader back up. I don't reset and repair all the time. I think that's excessive. If you're having big problems, I will. But that's a fix, right? What we're talking about is maintenance. Maintenance doesn't require you to repair and reset the database. And then you just come back in and I'll open right back up, and I feel good that I've got some solid stuff going on there. You're welcome, Jerry. But I do this every morning. This is exactly what I do every morning. Or like Gary said, he does it at the end of the night, end of the day. Make sure he doesn't wake up groggy and forget. Reduce your crashes by 90. I like it. I just bought a supercomputer. Actually, I was gifted a supercomputer. And there we go. We're back up. And then I'll bring S&P back up too. So guys, that is the second hour. We got about 45 minutes left. I'm going to take a quick second and pause. And then when I come back, guys, do me a favor. Put me through the ringer. Ask me some things that have been on your mind that you really want help with. And you're like, man, I don't want to take up class time for that. Take up class time. It's Friday. Life is a gift, Morgan. That's all you need to know. Life is a gift. I'll be back in 5. Good. I firmly believe life is a gift. Is it the Jamaicans, Ron? They wake up and they say thank you, and then everything else is bonus. I love that. That does it for you today. Probably see you on Tuesday after you vote. If nobody does anything else on Tuesday, vote like your life depended on it. No matter which way you vote, guys, vote. I've already done it. I've already cast mine. So check it out, Mike. Weak triggers, no areas inside of triggers. Does everyone see that? Weak triggers, no areas inside of triggers. 66% of the things that make me happy are gone right here. Can you guys give me a why? All I'm doing is talking about advantages. I don't have the advantage of momentum. I don't have an area inside of favorable large triggers. I do have an area that may hold. Price reached it, triggers are above. But I don't know. I have no idea if this market's going to continue up. I'm not just jumping in arbitrarily. Some of you will say, you know what? If they produce a reversal bar in the direction of the trend and the direction of the triggers from the area that has the potential to hold, well, then my risk is established. And if I get that entry, I don't have an ATM strategy. If I have that one, then I know exactly where my stop goes, 100%. Where's $100? 96, 98. But do you see how 66% of the advantages are gone, guys? And that reversal bar does not guarantee a win. It just kind of reduces your stop a little bit because honestly, you don't have anything to put a stop behind. And for you guys that get freaked out about seeing price, I pulled it off of there. I think we did this yesterday. If you right click over here and hit properties, you can make it say whatever you want it to. And let's hope for the loser. Because guys, the whole point, the reason why I did this is you have to talk to yourself and you have to say to yourself, I have this advantage. I don't have that advantage. I don't have strong triggers. That's got to be a red flag. I don't have an area inside of favorable large triggers. That's got to be a red flag. And that's why we did this earlier, guys. That's it. That's all I was working with. Does that make sense? For you guys that are afraid of missing out, I'm afraid it's going to go without me. I'm afraid it's going to continue up. I'm terrified that I'm not going to make my money if I don't make it right this very second. Guys, following your plan just kept you out of a big, ugly freaking loser. That is why we have rules. Preachy, 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 preachy. I know. Get off your soapbox, Novak. We get it. But if it would have went up, one of my favorite things. Yeah, but if it would have went up, man, I would have made a lot of money. If it wouldn't have stopped me out, I would have made a lot of money. If it wouldn't have run my butt over, I would have made a lot of money. And you guys cling to these ifs. If. Guys, if I was better looking, I wouldn't be talking to you right now. I'd be in the movies. If I was smarter, I would have wrote the software. And if a frog had wings, it wouldn't bump his butt when it hopped. This is true. Do I have momentum? Yes. Do I have a clear path? I do not. Do I have an area inside of triggers? I do. Coming from a bad top. My large triggers are way up there and price may return to those. If all I'm doing is speaking in terms of advantages, I don't have favorable large triggers. I don't have a clear path. The only thing I have is momentum. If your sister had wheels, she'd be a bus. That doesn't sound very nice to your sister, Pete. I like it, though. Do you guys see how that works? All we're doing is talking about advantages. But Mark, this is crap. You're sitting here and you're telling me that the rules aren't met and clearly the market is moving. How come I'm not getting paid? You are on the right ones, right? You are getting paid on the right ones more often than you're not. This is what you have to believe. I have to believe that the next trade is coming. I have to believe that these patterns repeat themselves. And if I don't, I'm gonna lose money. I'm gonna hope. I'm gonna wish. I'm gonna pray. I'm not gonna have an advantage. What do you guys want to talk about? Making me take losers for a point or to prove a point. Guys, that's the beauty of sim. Take 1,000,000 losers and learn how not to take those losers. I love what I do. I love teaching you guys this stuff, but I'll tell you what, you gotta want to learn it. You've got to want to learn these patterns. You've got to want to learn these rules. You've got to want to recognize these looks. My desire for you to be successful has very little impact on your success. Jerry, they sent him an email yesterday, I want to believe. They're going through the final steps. They needed about 7 or 8 working days, but they're almost there. They're so close. So close, but it got pushed again. Because John refuses to try to release it until it's perfect. But man, we're getting so close. All the funding stuff, AMP is doing everything. I believe this afternoon, John anticipates being able to connect through the funding company to be able to create everything that he needs to make it happen. I'm not sure, Jerry. I wish I could answer y'all's questions. Until it's released, I just don't have all the answers like I wish I would, and I don't want to say the wrong thing. My assumption would be somewhere around 20, but it's just an assumption, and you know that what that does to you and me. So already decided to go short at the mid-band. Already decided to get out just short of the mid-band. Odds favorable, clear path, jump in momentum trade. 50-50 trade, waited for smalls to clear. Yellow entry. Yellow 1-to-1 for entry. Probably the best entry in decisions around large sharp mid-band scare juice. So let me see what you did here. So your first jump in, Wayne, directly into the mid-band with the large triggers a full bar away. So that is directly into a termination condition. Great job getting paid before things got ugly. The second trade, when it closes that gap and they make decisions, everything says we're still going up. So you get to the other side of trouble and you get paid. Wayne, I think you did this about as well as it could be done, my friend. Your first one, there's your up-down pattern with momentum on every chart right there. That might have been a good one, just a little bit sooner, and it gives you a little extra room to get to that mid-band. And then once the mid-band gets hit, the large triggers are a full bar away. There's that gap theory, and it does exactly what you anticipate it to do. And then when it heads back up, you find your opportunity. What a great job, dude. Nice job. Nice trading. Look at that. There it is. Weak triggers, straight back to the mid-band. There's your gap theory. Holy crap, it happened again. Is this a pattern that we could start to recognize? There it is again. There it is again. There it is again. Dude, that's a great day, Wayne. Nice job. And when a bad top hits a mid-band and one-to-ones, the large triggers don't follow. Guys, they're probably trying to get to that fib. Do you see how any shorts taken inside of that gap are doomed? That's what I want you guys to get out of the gap theory, is that if you try to go short in that gap before they return to the large triggers, you're more likely to get run over than you're not. You may get to a point in your life where you use that gap theory to find a way to get back to those triggers. I know a few people that do it. I do it every now and then if the conditions are right. Good stuff. Great picture. And Gary says start with one one account. I don't give trading advice. But I do know a lot of people that bought all 20 before they could qualify one. And guys, that's going to be great for Nexgen's business if you're one of the people that want to do that. But the educator in me wants to tell you that may not be your best choice. What are we talking about? What do you guys want to talk about? Price reached a divergence high and the triggers are below it. That's a termination condition. That's an area that may stop the market. It's an area that may create an untradeable bounce. That's an area that could reverse it completely. I don't know what's going to happen. But I do have that rule in place. Keeps me safe. Whoops, 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 whoops. Momentum, clear path. Jumped in early, had to move my stop, too much risk. Now we hope for continuation short. Stop move, finally got hit for a huge loss. 7 points, Rob. All right, so Rob, I got a great lesson for you. Thank you for telling me that you saw a clear path. This is going to be such a great lesson for you. And guys, this is for everybody. And Rob, you get rock star status for bringing this up so that we can turn this into a lesson. Let me go to the trading guide real quick. So when we talk about termination conditions, guys, because you've got to define it, right? You've got to define whether it's a clear path or not. Fibonacci support, Fibonacci resistance, everybody knows that one, right? Yellow one-to-ones, divergence highs and lows, we all know those. 3 divergences, yeah, Mark, I've heard it a million times. The one that escapes people more often than not is the large chart mid-band. The large chart mid-band is a termination condition. The large chart mid-band is 100% likely to stop the market if the large triggers are a full bar away. Rob, that's the gap theory. If I hit the mid band and the large triggers are a full bar away, I can't take a trade into that mid band. If I hit the mid band and the large triggers are a full bar away, it is 100% a termination condition. So what happened on yours is that we hit the mid band and the large triggers were a full bar away, and it closed the gap right to those large triggers. And this is awesome because your look is a good look, right? But it's super late. If you're going to take this look, Rob, getting in just below the mid band is so much easier. So let me do this real quick. So, oops. You've got momentum right here. Smalls, large, everything, clear path. It's beautiful all the way up here, Rob. This is where you want to enter. You want to get into these trades, Rob, close to these areas that are getting broken. And this, where it finally gets below, is 94. And that's 94 right here. And it gives you 4 points to get to that mid band. What you did is you traded directly into the mid band. You see the mid band, this big green thing? On your large chart, areas are defined on the large chart. You traded directly into this area. And sometimes these mid bands are no big deal, Rob. But do you see how far away your large triggers are? Your stop placement is for a high probability trend trade. Your entry is for a momentum trade. You're managing a momentum trade like a high probability trend trade. But the lesson, Rob, is the gap theory, and that's going to help you because you're getting good at these. But if you go to the spreadsheet, I want you to click on every link that says gap theory. Because what it's going to do is it's going to reinforce when you shouldn't take that momentum trade into a mid band. Because the gap theory works more often than it doesn't. And the gap theory, all it says is that if price accelerates away from those large triggers and it hits an area, it snaps back. And it's a cool pattern. And it doesn't necessarily mean that you go the other direction. But what it does is it's going to give you this big red flag that says, all right, I have to be calm for just a minute. I have to be patient for just a minute because it may suck back to those triggers. And Rob, the other thing this weekend when you're talking about it and looking at things, identify what kind of trade you're in. If you're in a trend trade, a pullback to an area inside of favorable large triggers, your stop goes above the triggers. If you're just jumping in arbitrarily, hoping for momentum to carry you, you've got to recognize that loss of momentum as a failure of the trade. And guys, when your trade fails, it's okay to exit and wait for the next trade. Does that make sense? And this is one of the reasons why I encourage you guys. Every time you get into a trade, understand what kind of trade you're in. Know the rules for entry, know the rules for exit. And it's a process. It's a process. Rob, you nailed the highest probability trend trade ever the other day, and you did it absolutely perfect. And now you're incorporating these momentum trades that you don't fully understand, but you're doing it with a live account, which is 100% your right. I've been on simulator for 4 weeks because I'm learning something new, and I want to make sure that I can do what needs to be done and understand my entries and exits before I risk live money on it. That's the responsible way to do it. Termination, guys, untradeable bounce. You can say whatever you want, Rob. I know you're listening. Steve Diego says, hey guys, I don't know if you knew this, but when price is above large strong triggers and the smalls are strong triggers and they're separated from large triggers, that's a lot of triggers, Steve. With this momentum and trigger look, price has the potential to get to fibs. And if I get in on the other side of anything that could be problematic and I've got room to get to that fib, I can make a pretty easy $200 in 13 seconds. And then if everything continues to scream up and I get above all my problems, I can do it again. And, oh, Steve, if I ever meet you, I'm just going to hug your neck. Guys, when you have momentum and a clear path, and Rob, take a picture of this. When there's nothing in between you and your target, that's when these trades work the best. Anytime there's a line in the way, these lines can create bounces, guys. And if you're just jumping in, hoping that lines break, more often than not, it's going to screw you up. Look at the bounce off of the line, and then it goes straight to the line. And look at the bounce off of the line. If you go through and study this, man, eventually it clicks. Eventually it clicks. It never clicks first shot for me. But there it is again. Everything says up, life is good, and it's the exact same pattern, the exact same look. And with all that momentum, he could have jumped into these one-to-ones, but look at the spike. And he could have jumped into this fib, but look at the spike. So he gets in on the other side, and he's got room to his target, and it's easy. And then he gets to the other side, and he's got room to his target, and it's easy. And another $400, guys. And $800 worth of trading there in 11 minutes. $800 worth of trading in 11 minutes because he let momentum and clear path lead the way. That's pace for a $200,000 year. And guys, there's two people in this room that do the same damn thing every day. There's two people in this room that when they post a chart, I don't even have to look at it. I could say, oh, look, Steve posted. I bet you it's momentum and a clear path. Ron C posted. I bet you it's momentum and a clear path. And I bet it's another winner. Guys, there's a reason that these people are finding such a level of success. They're taking the very basic concepts and they're taking them to heart. And they're foregoing their desire to be in every move. Even when they think it's going up, when they hope it goes up, when they want it to go up. And they're saying, my best chance of success comes from the other side of the line. My highest probability comes from trading away from these areas rather than trading directly into them. And my highest chance of success is getting the hell out when I get to one because it could create a bounce. It takes a while to get to this point, guys, because once again, trust. If you don't trust, why would you do it? You have to believe in it. We'll do it again. We did it yesterday. Trust. We found our definition. To rely on the truthfulness or accuracy of. I love that. I love words. Or even this, to hope or expect confidently. That's a good one. Why am I confident? I still hope it goes up, but I'm confident because I have momentum and a clear path. Pretty cool, right? To place confidence in, to be confident. That's what we're working towards right now. Guys, I have confidence that termination conditions stop the market. I choose not to trade into them. I have confidence that momentum pushes the market. And when I have the combination of the two, I have confidence that I will find a way to get paid. Because I've done a lot of study. Great stuff, Steve. Thank you. We've got time. What do you guys want to talk about? Maybe we should sing a little Lover Boy. Everybody's working for the weekend, right? There's something to it. Steve, would you agree that the trade's not as easy as it looks like in the beginning? Because it requires a level of patience. I blew out. I screwed that up for almost 30 days, Steve, until it all started to click. And it took me that 30 days to believe and incorporate the idea of the momentum plus the clear path. And it's a plus. It's not an or. Man, once you get it though, once you get it, it's money. Once you get it, it's money. I love it, guys. There are no boundaries to what is possible with the software. There's no restraining, there's no limits, guys. all you got to do is find the patterns. Going in, and guys, just everybody knows that I'm not a salesman, right? I don't sell software. I teach people to read indicators. I teach people to recognize patterns. That's important as I go into what I'm about to say. I saw in the other room Janesh talking about the ale class and how he has room in this class, guys. I am 3 weeks into it right now, and I can tell you with absolutely no hesitation, it has completely changed the way I look at the market. And for me personally, it has been amazing. It has been eye-opening. It has produced opportunities that I would have otherwise ignored. If you are comfortable with your base plan, if you're comfortable with what you're looking for, if you're confident with what you're looking for, it's a phenomenal class and it's very well taught. If you're not comfortable with some very basic concepts, it'll be challenging for you. I think it's a week, Andy, and then it's not just patterns, guys. It goes into accountability, and it goes into mental state, and it goes into emotion, and it goes into so many things. Janesh has been with Nexgen for, I want to say, somewhere around 15 years or 10 years. And he's developed this using the Nexgen foundation. He's creating this something else, and it is freaking amazing. Reach out to him via DM if you have questions about it. I'm not qualified to teach it. I'm not qualified to answer questions on it. But I can tell you the one thing that I did do is I created a plan, and I'm studying, guys, and I'm like 1,000 pictures in the last 3 weeks, it feels like, learning these concepts and learning to master them. And just the same way the high probability trend trade changed my life, the way recognizing strong triggers changed my life, the way understanding termination conditions changed my life, this is just one more life-changing thing for me. And I'm so excited about it. And that's it. I just wanted to share that. So if you're curious, reach out to whoever sold you software. Reach out in the other room to Janesh. Get some answers. There's probably a video. But I'm freaking stoked. And if you look in the traders chat room, you're seeing people taking some monster trades. Those monster trades that Safia takes. When you see her second target at 10 grand in profit, that's because of what they teach in that room. And true story, Safia came to this room to read the indicators, and now she's teaching that program, which is pretty freaking amazing. That's definitely a proud moment for me. And now she's teaching me. I don't know everything. And now she's teaching me, and that's a lot of fun. Determination. Rule number 2 gives you the ability to see where fights may happen, where decisions are being made. Rule number 2 gives you the ability to understand when the market may potentially be setting up for consolidation or chop. I need some trigger lines through this blue fib to feel good about looking for a short trade. I need everything to roll to feel good about a long trade. And until one of those happens, I have none of my rules met. So I'm going to sit on my hands, and I'm going to do nothing, and I'm going to be okay if the market goes down from here and I didn't get an opportunity. That's the hard part. Anybody have plans for the weekend? I'm going to go hit golf balls. That's my plan. I'm going to the driving range. I'm going to work on the process that yields results. I'm going to study. I'm going to annoy the hell out of my brother with 1,000,000 pictures. I'm going to practice on market replay. I'm going to walk my dog. I'm going to hug my wife. Voting and prepping for Sunday's class. You start Sunday, Gary. I love it. And guys, I'm excited to hear from you. If you take this class, send me a message. Tell me how it's going, because I'm going through the same process as you. It's kind of cool. There's someone in the class right now. We're going back and forth, and it's pretty neat because we're having the same aha moments about everything that we're learning, and it's kind of cool. Let you know that you're not alone in it. Doing it with my brother as well. He got the intro to it the same time I did. So good stuff. Are we shutting it down early? No, I don't want to shut it down early.